All right, what's up?
Good afternoon, everybody. Welcome on in. Pretty fun day in the market. I say mainly because Celsius had a 5% reversal, came back
Yeah,
to
there you
green.
go. I saw it was on like 52.
It was all the way down in the depths, and then I said, "Hey, I'm going to buy some puts here," but then I didn't actually, but just saying it was enough to reverse it. So that was my thought process right there. Tesla's up 4.62%.
Give
These
me the five. What's the
are
point? Like, I need the screenshot. Give me the tweet. That's what I always
Yes.
say.
The stock is now down only 21.66% this year. And I say
Making
only
growth.
because at one point it was down 43% this year.
Hmm.
So stock is coming back. This is trading at honestly right where it was in the end of January, right before it kind of that dump down into 182, trading back to 195. If you look at that last day in January before it dumped, Jan 24th, it was trading at like 207. Would be very curious to see if we can run back over that mark. Well, really in March it even got back up to there. But yeah, the 200 level, big psych level, we haven't touched 200 in a few months at least. And so I'm excited to see if we can get back over that. Glad we were all buying some Tesla in the 160, 170 range, adding to those purchases because that has definitely helped here as it's continued to move up. Outside of that, Hood is also having a good day. Not as good as it was off the bat. It was up about 4% earlier, 4.5%. It's still up 1.5%. They had some news, right?
What stock? Sorry.
Hood?
They got an upgrade.
Yes. A little bit of news, a little bit of upgrade.
Trying to get it in front of
TME,
me. They also had their annual shareholder meeting today.
nice.
Damn.
Uh, TME slightly green. Ooh, Celsius still moving here.
Damn.
GCT,
You know what's funny, Wolf?
yeah.
Georgia, against Portugal. Georgia was plus 700. They just scored a goal in like the second minute.
The Georgia Peaches. I'm kidding. I know it's a country.
I was gonna say wrong
Uh,
Georgia, but close. And by the way, it was no, this isn't it. Wolfie Research is the one who upgraded Robinhood. I didn't think it was that.
no, we didn't upgrade them. Sorry. I'm just kidding. We are not associated in any way, shape, or form. In fact, we are opponents.
You were enemies.
Uh, we are sworn enemies, not by my decision. All right, let me get stock talk up here. Okay, we are pulling back here a little bit on Tesla as we are talking. We're pulling back on everything. QQQ, Tesla, SPY. Just had a little bit of a drop in Google. Looks like Coin is headed for a new low of day. How about this reversal on Coin? I don't know if you guys have been watching this because everyone we were kind of bullish on Coin this morning. It popped up. It was up about, a percent or so, nothing crazy, but now it's down 3.5%. It's just selling off all day long to the downside. And that's just probably because it's moving with crypto, which Bitcoin is also at low of day, trading at
It's
60,700.
so
All
it's
right.
only it's funny because with the NVDL and CONL, we'll see how that ends up looking. I might win, or I still can come last place.
You still can come last place, but you might win.
Yeah.
Those are two different things. You know that, right?
Yes, I do know first and last are not the same thing, but some could say if you don't finish first, what's the point?
Ricky Bobby.
Yeah,
There you
a little
go.
shake and bake.
I love the way the cars go by.
All
All
right,
right.
before we move on, I know Stock Talk, when I came on here when Apple was going crazy, I took my victory lap at the start. You want to talk about Amazon for a half second here?
I mean, I want to talk about it for more than half a second, so let's just go to the panel first.
Half a second has been used.
I was trying to tell you that Amazon was going. He was saying I think I'd pick Apple or other names over it.
Yeah,
Here I am, right again.
This is just the beginning, my friends. This is just the beginning. Wait till we break into the 200s. This thing is going to go from 2 trillion to 3 trillion market cap, in my opinion, faster than any stock has ever done it.
Nvidia did it in like 200 days. You think? You think it's going to beat Nvidia?
Okay. Outside of Nvidia, then.
Yeah, fair. Let me get the actual number in front of me though.
I don't know, 200 days, that's a while. It's a long time.
This is just the
Just
first move. Too early for us to celebrate, but it is my biggest position, and so a nice 4% move on the biggest position on the port is nice to see. But it's just the beginning.
No, I
I'm
lied.
still I'm still a
96
buyer.
days, by the way. for
Yeah, I'm
NVIDIA to
still
go
a
from 2
buyer
trillion to 3 trillion.
That's
in that
more like it.
175 to 185 range. I remain a buyer. So if it does pull back there, I'll just buy more.
Okay. All right, well, let's pop around a little bit and we can circle back to that. Let's go over to Falco first and get a look at what you have been watching.
Yeah, thanks, guys. I hope you're having a great day today. I'm excited about Amazon also. Amazon and Google are my two largest single stock positions. And yeah, the Amazon breakout, like if you go to the weekly, the double top that it made back in 2021, and then like the pullback, and now this rally is kind of reminiscent to Micron actually of the double top it had between 21, 22 pullback, and then the breakout. Like I feel like we're right where Micron broke out at the like mid March area, like March 18th kind of area, just from a charting perspective. I know they're different companies, all that good stuff, but just from a charting, it looks similar. And yeah, I'm in the camp with Stock Talk. I think that Amazon's going to run here on this breakout as long as the rest of the market doesn't anything crazy happens. So I'm excited about that. Rivian, big fade today on that news with Volkswagen. I just think there's too many bag holders in Rivian, and so they looked at this big gap up today. I mean, it's still up 19%, but when this thing's up 30-40%, it feels like that's a good opportunity to unload, and a gift for a lot of those people that have been bag holding this stock. So we'll see what it does after all of this volume. I mean, if for any reason we take all of today's volume out to the upside, maybe this thing could continue. Yeah, I don't really know how successful their partnership with Volkswagen is going to be, but as of right now, a lot of selling into that gap up. I did get stopped out of Lindy. I know that's a swing trade that I had talked about last week or so. Just not really working a bunch back below the 100. So I just took that one off. And, I'd rather win bigger on my winners and then lose small on the losers. I'm kind of interested in Bros. Looks like that one is starting a potential stage two breakout, though. So looking at that to play with bull call spreads. So buying a closer to the money call and then selling further out of the money calls. That way, I know my exact risk. I don't have to deal with volatility in the shares or anything like that. So I like the bull call spreads on Burrows for August. And then Tesla, also a nice move today. So we broke out of that pennant pattern. And as long as everything goes okay the rest of the afternoon, the next hour, looks like it's going to be the highest close that this thing has had in quite a bit of time, and could be resuming an uptrend maybe if we can start closing above 200, but also put some bull call spreads on with that. I got the August 190 long calls and then the short 205s for August. And then I know that they have, just because that's where that gap fill is, up around 206. And I know they do have delivery numbers next week. I don't know if the market's going to care about that, or they're looking through that number in order to get to Robotaxi, but those are the ones I'm looking at and what kind of caught my eye today.
Perfect. Thanks for kicking us off there, Falco. Guys, see, we also got 400K Investment Project joining us. What have you been looking at in these markets lately?
Hey guys, thanks for having me. Yeah, it's been a good few weeks here. One of my bigger positions is Enovix. I don't know if you guys are familiar with that, but it certainly has some good news. Yesterday, it announced that it's getting some money from a leading VR or headset manufacturer in California, which there's only so many, so it's probably Meta or Apple. And they're basically giving them money to start tooling for some production there. It's a very interesting company in my view, in that you have incredible management buy-in there. I mean, if you're familiar with TJ Rogers, I mean, he owns a huge amount of it himself. He's the chairman, and then the management team's just fantastic. I mean, management have left mega caps to come join this little $2 billion company. So it just says a lot about what they think about the company's future prospects. And when I run the numbers, I kind of get 2-ish billion run rate revenue down the road, and it's a $2 billion company right now, and it's got some it's basically talking to a lot of the mega caps, like as I say, the Apples and the Metas and Samsungs and Dells. And so there's likely to be more announcements coming in terms of who they're producing for, and their technology just continues to be impressive in terms of the results of their batteries. So yeah, that's been a big winner lately. Happy to have had lots of that. A little bit harder, what is it? 40% higher than it was a few days ago, but I'm still not opposed to adding here. I think there's a lot of future upside in it, and I'm surprised it's not talked about more. I mean, it is only a $2 billion company, but anyway, yeah, that's kind of what I've been looking at lately. I am a bit of a contrarian at times as well, so I'm kind of watching things like Unity, which is way down and just out of favor. I think there's a potential turnaround there. Maybe Roku as well. Yeah, but I'll pass on the mic here, and yeah, those are sort of what I'm watching. So.
Sweet. Thank you for giving us an outline there too. And definitely, guys, if you have items you want to go into, or you have a question for anyone else, feel free to call that out as well. I do want to keep making sure that we move around here. Special guest alert, special guest alert. Let me hit him with a little, because we got Sarge up in the house. Look at that. Ask for good things and they shall come. Sarge, what's going on?
Hey, how is everybody? It's nice to come back to the space after a little bit of time away. Although I was anonymous for part of that time, I've been paying attention.
Yeah, we saw we got the shout out in your article
Well, you guys made me
yesterday.
money yesterday, so when you make money and somebody else kind of made it for you, well, you give them credit. So I figured it couldn't hurt you to write a nice article about you.
There you go. There you go. I love to hear it. And hopefully everyone else is taking as much away from these spaces as you are. I would love to turn the mic over to you. It's been a while, but hear about everything you've been looking at in this market lately.
God, there's so much to. I mean, it's the rotation that's on, off. I mean, it's been a little bit difficult to manage the last week or so, which I can't complain because I think we've had a pretty easy year or so to make money, but easy year and a half really to make money. So we can't complain, but this is when it gets difficult. And it's going to probably become a little bit, it's going to become more sloppy, sloppier as we head towards the election. The debate will kick that off tomorrow. I don't know, I don't know if we'll see a market reaction to the debate because I don't think the market's very excited about either candidate. But if one of them performs exceedingly poorly, maybe you will see a reaction. I don't think we've kicked inflation's butt yet. I think that as I look forward, as I look at all my macro models, because I do too many of those, I do see this disinflation that we saw the last month or so lasting into maybe August, which I'm concerned about because I think that will give the Fed a false flag for their September meeting. I don't think they should cut that close to the election because that would bring their independence into doubt. But if we have disinflation into August and then inflation reaccelerates, they may be cutting rates if they do that, if they do cut short-term rates at that time, at precisely the wrong time. And it will be an error. And we will feel it down the road because I do think they're going to have to fight inflation again through Q4, maybe into Q1, even as the economy slows. So it is going to be some uncertainty, some real uncertainty. Whoever does win this election probably is going to wish he lost.
Ain't that always the case these last several years? Yeah, well, let me get your thoughts real quick on reactions that you believe the market will have based on indications of, who the public thinks is going to win, and then ultimately, when someone does win, how you think the market would react to that.
Well, because former President Trump does represent much less regulation, I think the majority of stocks would benefit from that. So the marketplace would probably prefer to see President Trump. As for stability, I know there's a number of folks that would prefer current President Biden. Uh, I think if you're on Team Biden, I'm not going to express my political opinions here, but I think if President Trump goes and selects Ron Swamy as his running mate, I think he's a very charismatic guy. I think it will energize his side. I think if Biden sticks with Kamala Harris, or if the Democrats don't replace Biden, because they probably could re-energize their side if they simply replaced him, because he does appear to be someone who's not always really paying attention anymore. They probably have to do something to their ticket to re-energize their side. Otherwise, at least the corporate base will probably lean right this election.
What do you think, Stock Talk?
Yeah, I mean, I try not to factor too much of my political opinion into what might move markets, but I mean, look, I think markets will certainly be reactive to it. I think, as Sarge mentioned, the debate we have tomorrow should give us a cue, based on who the media decides is the winner, as to how markets are feeling about that candidate. So, if in tomorrow's debate, Trump is kind of the unanimous media elected winner, as I like to say. If that's the case, we'll see how markets react to it. If they react positively, I think that's your first indication, at least coming up into the cycle, of how markets are feeling about the candidate. So I'm more of a reactor than a predictor always. So I'll take my cues, as we get deeper and deeper into this presidential cycle. And, I'll take my signal from how the market reacts to these events, whether it's the debates or whether it's, some of the polls that will start coming out. And based on that, I'll adjust accordingly. I mean, there's going to be, these kind of general thematics that people associate with either political party that I think you'll see some movement in. There's going to be some meme stocks, that react to this. I mean, you're seeing that today with DJT, Donald Trump's SPAC. It's up 4.5% today, I imagine, in anticipation of the debate. And generally speaking, there's sectors that are associated with either party, right? Like people tend to think that the electric vehicle and renewable energy and those sectors are associated more with the left, and that things like financials and oil and gas companies are more associated with the right. Now, that's not always the case. In fact, if you go back to the last presidential election, that was the thinking headed into the election. But if you look at the performance 3 months post-election, it was actually the opposite. You saw a lot of those quote unquote democratically associated sectors actually trade down, and you saw a lot of those quote unquote conservative associated sectors trade up. So, it's certainly not a straightforward thing. And, I think that's why it's important to take cues from the market incrementally wherever we can get them, whether that's from a debate or a poll or whatever the case may be.
So, Sarge, aside from the election, we've had a lot of other things that have been on our radar. NVIDIA, of course,
I
led
know
the
Sarge has been
charge.
watching Palantir too. I've been seeing the tweets.
Yes, Sarge, what are your thoughts on Palantir and this whole AI thematic?
Oh, Palantir is one of my leading names right now. NVIDIA is as well, although I traded it pretty poorly for this week anyway. I got out of some around 120 earlier in the week, and I haven't bought it back yet. I'm still long the name, by the way. I'm not out of the name, but I haven't bought those shares back yet. I expected to buy them back around 112 or so, and it never got there. And I've decided not to chase it, so I'm kind of watching it, with my thumb in my ear right now, trying to get it down a little lower before I buy it back. Palantir, I think, is just, I'm really impressed with this guy, Karp. He's so eccentric and so intelligent, and it's so obvious. He knows where he wants to go. He doesn't see competition because, in his opinion, competition isn't good enough. If you look at the balance sheet, if you look at the cash flows, they're golden. I mean, they're a fortress. They could burn cash for a year and change, and probably, I mean, obviously that would hurt the stock price, but the company, if you work there and you didn't own stock, you'd be fine, because I think they can weather that. And they have the relationship with the Department of Defense. They have the relationship with the intelligence community. A lot of people don't like them for that. I don't know if I like people spying on me and all that, but you know what? I want to be on their team. So I mean, I'm going to get on board. If these are the guys that the government has chosen for now, anyway, until they screw up, and they haven't screwed up yet, then I'm going to be there. And on the corporate side, they're just as big as into the big data, into the analytics on big data, and everything else that Palantir does. They've gone the wise route, I believe, with these boot camps rather than traditional sales. And even though it's expensive, obviously expensive by traditional metrics, I do believe it's maybe being priced that way for a reason. Now, in my fantasy world, because that's where because I'm long the name. I'm long quite a bit of the name. That I'm seeing that as them pricing in larger future margins because the growth rate probably isn't going to expand that much, although they're doing well on the commercial side. The growth rate's probably in the low, like 22, 23%, and I don't see it growing much past 25%. So sales are going to be hopefully consistent, but I see really large margin, really impressive margin as perhaps sustainable, and that's how I see the stock. I'm part of the cult now, I guess.
Speaking of largest positions,
Oh,
I've been obviously talking about Amazon for a long time, and it's my largest position. How do you feel about Amazon? Do you own it? How do you feel about it here? What's your outlook on it? I'm curious. I haven't talked to you about that name in a long time. I think since we did our last spaces years ago.
Yeah, I was out of it for a while. I am back in it now for a while too. It's having a nice day. It's back over 2 trillion, I think, in market cap. I think I saw that. I think Amazon it deserves to be among the magnificent six or whatever it is now. But it's
wow, did you just diss, Tesla there?
kind
Stock
of
Talk, you gonna take that?
kind of. I mean, Tesla. Not sure if Tesla belongs in the group anymore. I really haven't made up my mind on it. I'm not in Tesla. CrowdStrike is my largest holding, by the way. CrowdStrike they've been great to me, and I've been selling CrowdStrike. It's just that the stock went up so much that I had to pare some back. But Microsoft had been my traditional largest holding, and I'm just trying to get CrowdStrike down to Microsoft's level, so they don't dominate my portfolios that much.
Stock Talk, I'm curious your thoughts on Palantir.
I don't know. I mean, I think Sarge has covered it really well, and I think there's a lot of smart people that are in it. Maybe for me, it's just too much of a black box story for me to wrap my mind around it. I don't know. I've never owned it. One of my cousins bought it at IPO and was like screaming at me to buy it for years, and I just never really found an entry or I guess a trade that I liked on it, and so. No, I've never really been in the stock for any meaningful period of time. I think I've traded it maybe a handful of times with options, but I'm definitely not the guy that has the inside track on Palantir. I mean, it's a business that I think, if you zoom out, the sort of secular argument in favor of it, I think makes sense. I think the idea of it being an AI beneficiary makes sense. I like the idea that it's so intimately tied to the U.S. government. I know some people view that as a negative. I don't. I think anything tied to the U.S. defense complex is in pretty good hands. But yeah, I just don't own it. To be frank, that's probably the simplest way to put it. I just don't own it, and I've never really found a spot to buy it. But I'm not opposed to owning it at some point in the future. I think for me, it just becomes tricky because one of the things I do for my long-term positions is I try to entertain both sides and play devil's advocate. And without understanding the story well enough on the long side, it's tricky for me to kind of mentally play out the other end of the argument. And so, yeah, I've just never found a spot to buy it at, frankly. And I'm not bearish on it by any means. I just don't understand the story well enough, But there are plenty of guys out there like Sarge that have been covering it with some awesome details. So.
Well, yeah, and I understand the fundamental story because that's what I understand best as a longtime investor, more than I do what they actually sell. I mean, I understand the basics of what we all understand about artificial intelligence and on the software side and the hardware side and all that. And I understand big data and big data analytics, from as a consumer and as a trader and an investor. But I couldn't look at, I couldn't watch Palantir do what they do and understand what they were doing. So I don't understand their business that well, but I do understand the fundamentals. And they were one of my almost original names when I used to run the stocks under 10 portfolio for under $10 portfolio for the street. So I've had, if people have been with me since Palantir, they have an entry point of around $7 if they've never averaged up. So then
Is that good?
that's pretty good.
That's pretty good.
Last year's about $24 and change. It traded as high as 27. Once I no longer ran that portfolio, I was able to buy it from my own accounts, and so I have about a 16 handle. But my followers, if they've been with me, they have a 7 handle.
Stock Sniper, you got your hand up?
Yeah, I just wanted to say, kind of piggyback off what Stock Talk was saying there. Palantir, I feel very similarly about the name, and I don't hear many people come out and say they don't own it. I'm not saying I don't like the stock at all. I think I do like the stock, but I mean, I feel like I'm the only guy who doesn't own Palantir. I have traded it just like he said as well, many times. But for me, it's like I remember a couple years ago when I could have bought the stock at a much lower price than what it's at currently. And at the time, I didn't really fully understand what exactly they do. And by the time I did really understand what they do, they kind of already taken off. And the way that I see it now is like, I mean, I still do see the upside potential to it, but you have to ask yourself, would I rather have this or would I rather have more Apple, more Nvidia? Would I rather have like many different names, that I could see also? And for me to open up another position there, I have to see a massive upside conviction. And in my opinion, there's just other names that I'd rather develop larger positions on than kind of get into Palantir. But I just wanted to talk and say he's not the only guy who doesn't have Palantir. And I don't hear many people talk about not having Palantir.
We can't own them all, right? Can't own them all.
And if you
Well,
buy
unless you buy
VTI,
SPY. But yeah. All right. Sarge, real quick before we move on, any other thoughts just in market in general? And then I'm going to bring it over to Brian Lund.
I'd love to ask your listeners, your crowd. AMD was one of my names, for quite a while. I'm a big time Lisa Su fan. I'm out of most of it. I'm down to about 10% of my original position. But where do you guys see buying this thing back? Because I was thinking that here maybe I would start buying it back, but it looks like it's fumbling the 50-day moving average. It can't get away from the 50-day SMA. It seems it's on the wrong side of it though half the time. So I don't know. Just a thought. Do we wait for the 200-day, or do we get on board here, hoping that it ultimately maintains contact with that 50-day and heads north with Nvidia if Nvidia starts heading north again?
I'll be honest. I mean, today, we have Micron reporting, as you know, which will move the whole sector. If Micron has a strong report and reacts positively to it, I think the whole sector moves up because I think it's, just going to be a further testament to this kind of hardware ecosystem in the semiconductor sector that so many of these stocks have been running up on. So I think AMD will move up if there's a positive report tonight from Micron, and vice versa. I think it'll move down off that as well. But that's in the very, very short term. More broadly speaking, I'm like you. I've looked at AMD a few times, trying to kind of time the idea of jumping in it as potentially the second order beneficiary of the GPU market. But I think I want to wait for real strength in that stock. I don't want to just wait for the 200-day. I'd like to have the moving averages nicely stacked on that thing. I'd like to see it start surfing the moving averages rather than struggling to hold them, because from my view, it's going to be really difficult to time uh, AMD's market penetration, because I think where we stand today, right now, the hyperscalers and the Mag 6 or Mag 7 or whatever we want to call them are really leading the way on spend in this industry, right? When it comes to the vast majority of the incremental GPU demand we've seen in the past year, it's from the big dogs. And I think as long as that remains the case, it'll be difficult for AMD to get meaningful market penetration. And my logic behind thinking that is that these guys don't have budgets, right? I mean, Bank of America had a great piece that came out 2 weeks ago that said the big five are going to see, the big five tech companies in terms of the top five spenders on GPUs are going to see a 43% year over year jump in capex, the vast majority of which is going to be allocated to AI related hardware, servers, and GPUs. So when I see that, what that says to me is not only do these guys not have capital restraints, obviously being the biggest companies in the world, but they are willing to continue to accelerate their spending in this category. And the first thing that jumps in my mind when I hear that is they want the best products in the category, right? If you're not capital constrained and you're willing to accelerate spending that dramatically year over year, that to me says you want the top shelf products, especially if you're these customers. And so I think where AMD benefits here is when the demand base for GPUs broadens. In other words, when a higher percentage of the demand is coming from players outside of the Mag 7. So my view on it is I'd like to wait for some fundamental confirmation from AMD, and I may be 15-20% late to the move as a result of waiting for that, but I'd rather do that and see evidence that AMD is starting to capture some of a broadening demand base when it comes to GPUs, as opposed to guessing, hey, maybe they're going to start being competitive with NVIDIA in the next quarter, or maybe they're going to catch up on an innovation basis within the next quarter. Because at the end of the day, we know that Jensen Huang has basically promised a accelerated refresh cycle for these GPUs compared to what they were doing prior, where they were refreshing their GPU programs every 2 to 3 years. He seems to be promising at least an annual revision now, which to me says that lead is going to be hard to close. Not only is AMD going to need to recruit an enormous amount of talent, but just, logistically speaking, it's going to be a hard lead to close when your competitor at the top of the pack is constantly innovating. So I think AMD is a really tricky story here. I think it'll be a great trade at some point soon, but I just don't know if that's next quarter or next year. So that's my view on AMD. I'm going to be super patient with that one and wait for it to develop some real technical and fundamental strength before I'm going to get interested personally.
AMD is larger than I thought it was. Guess what the market cap is?
What is odd? Okay, I'm looking.
$250 billion. I won't get the suspense so much. But that was,
not bad. Marvell Technology is probably a tertiary name too in that elite AI capable GPU producing space.
Have we seen what's been happening to ARM Holdings? I thought it was expensive at the IPO. I can't lie. I was like, no, I'm going to let it come down to me. Clearly, I was wrong.
Well, you weren't wrong in April.
But that move is crazy too. ARM Holdings, watch out. It might get larger than AMD. ARM is currently the 75th largest stock in the world. AMD is the 40th. From growth to value, I've seen a couple moats in different parts of the conversation. I don't know if we've heard from you yet. Now you've been on the space a little bit. Would love to hear your thoughts if you have anything to add to the conversation or anything you're watching.
Not hearing him right now.
I'm not either.
Sarge, I'm curious to get your thoughts on one other name as well. What are your thoughts on Shift4 Payments? Is that a stock you own or you've looked at recently? Your mic's muted, Sarge, by the way, if you're there. I don't know if you're there. You might be on a... Oh, perfect.
No, I'm not in the name. I haven't traded it.
It's a name I've heard Shy talk about, right?
Shy likes it, yep.
Shy, we went through a lot.
Position.
Shy and Logical, we both went through, I feel like, a couple names that you guys would have some thoughts on. Anything to add into it?
Yeah. Palantir, totally understand why some people might be too hard to understand buckets. My vision, I got in the eights, and I haven't added because the valuation still doesn't make sense right now, even at this current price. Like, this is totally a long-term vision, only pure AI play in the market right now, in my opinion. However, they need to be growing closer to 25% CAGR, not 20% for them to be trading mid 20s to 30. And we still haven't seen that really. I do think my thesis on why that is the adoption on the AIP platform is absolutely awesome to see. It just we're not seeing it trickle to the top line growth yet because anecdotal evidence on my end and also people I've been talking to, a lot of the C-suite or the IT budget, they're not signing off on these large capex spend. Like, Palantir is really, really expensive to have their system in your enterprise until the feds cut rates, because that's essentially going to be the first sign for the enterprise size as a C-suite. Like, all right, they're not going to be raising rates. We don't have to be as defensive. We can actually start being offensive. So I do think once that happens, you will see. I'm hoping that a lot of the commercial clients will start spending on that program, and you're going to see top line growth. Other than that, what else did we talk about? I mean, Amazon's a monster. Honestly, it's going to be a top 3 company in the world. I think it's going to cement itself in that conversation with Apple and Nvidia, and it's just going to be Microsoft top 4. but I love to see this action. Like, I do think I'm annoyed this most recent dip. I didn't buy 200 calls because I think their upcoming earnings will be a home run, and I think that's going to trigger this next leg of a rally in that name. Where Stock Talk is right. Like, it's wild to say Amazon could just add $1 trillion in a short period of time, but I really do think so because they have so many growth avenues under their belt, and they're essentially their TAM is the American economy. They're just having so many partnerships infused with their Prime membership that it just gives them a very easy recurring revenue to kind of go on these other growth avenues that they want in the future. AWS is the best pure cloud computing play in the market. And they will have some kind of software presence in the future, in my opinion, leveraging AI. I don't know what that is. I know they have a Snowflake competitor, but it's not Redshift. It's something. It's Red something. I'm blanking. But other than that, today, I love today. Today was a freaking great day. I am probably gonna
Snowflake.
have. Yeah, I'm gonna have some tequila tonight for sure. Celebrating Snowflake and MongoDB just uh bouncing hard today. Love to see it, especially with the indices flat. Snowflake feels like it's a. They really need it. Once they broke 126, it's like, oh god, this is gonna go to 110. I love today's action. I don't where they just broke to 130. Now it's consolidating 129. That's great to see, but I just want them to continue defending that 126 level until the next earnings, which is in like 1 or 2 months. So love to see that. MongoDB, you saw the accumulation in that name last week, like above average volume, 3 straight days. It looked like it was bottoming out from like a triple bottom. I forgot what points from like a couple years ago. I was like, oh, this looks like accumulation zone, and we saw it today. I still think both those names have a ways to go for the chart to look somewhat bullish, but I was anticipating this. Like you saw Atlassian, you saw MongoDB, you saw there's some other software like Samsara. Saw a lot of the software names, Cloudflare, like bounce hard after this like software is dead narrative sell off. Snowflake wasn't bouncing at all. It was lagging hard, and I called out that Snowflake I could see catching a bid due to the other software names like clearly catching a bid on bottoming out. So let's hope Snowflake defends at 126 level. You asked for Shift 4. I mean, Shift 4, it's I don't like fintech. It's highly competitive, low margins. You're clearly seeing competition weighing on all their business because take rates are just going on a really opposite direction. In my opinion, Shift4 is the cheapest of all the fintech players, and they have a very high floor due to the acquisition potential. Founders and founder-led CEO. He is really, really smart. If you ever heard him talk, I do think he won't sell Shift4 out unless it's some multiple that he feels like it's reasonable. And this name won't get sold unless Jason signs off on it. So or Jared. Whatever his name is. He also has a huge a shoulder to shoulder relationship with the space economy. Like, oh, he is infused into that industry. Like, he loves that frontier. So this is an interesting way to play the space economy if they get hold out and don't get bought because they do have partnerships with Starlink, and I'm pretty sure that it's an exclusive partnership actually with Starlink. So like they're the fintech play of the space economy, trading at less than 10 times EBITDA multiple while growing the top line 40% with low teen like 11 or 12% free cash flow margins. Like it is so stupid cheap. And I do think once the narrative changes among these fintech names of maybe the rates get lower, the credit environment improves, like this Shift 4 has been holding the best of all those names, defending the 200 day and also catching it was like 12 or 15 million dollar insider purchase in the past like 2 months.
Yeah,
So
past 3 months, yeah, like I think like 11.5 million from, and not just from any insiders, right? From
it's a
top
CEO, yeah.
yeah, CEO, yeah. And I think somebody else bought some too outside of the CEO. But no, I agree with all that stuff you said. I mean, to me, it's getting, I mean, I put a little research note out for our members today on this name from a technical standpoint. I mean, for any people in the crowd that like to chart stuff, I mean, go look at the daily and weekly volume profiles on this thing. I mean, that in a vacuum is bullish. But I mean, on the daily, the 20s I mean, the 20 just crossed the 50 on the daily. The 20 just crossed the 100 on the daily, and the 50 is about to cross the 200 on the daily. So I don't know. This thing could be setting up for a move at some point here. And I mean, look at in the past, week and a half. Look at how this thing is held up in a volatile market with pretty aggressive sector to sector moves. I mean, this thing has just defended the 70 spot for the past entire week. So I don't know. Shift4 is starting to look very interesting to me. I added a couple more calls today to my existing position, but I like seeing kind of a consecutive move like that, where you get the 20 to cross the 100, the 50 is about to cross the 200, volume profiles sharp, insider buys, all the great fundamental detail you mentioned. I don't know. I'm gonna take a swing at the back. um, Anyway, Evan, I'll throw it back to you if you want to go around the panel a bit. I don't know if Brian has got to jump in, or Logical, or I don't know who's not got to jump in yet.
Wolf's here, right?
I am here.
Oh, okay,
yes.
sorry, you were cutting out for me earlier.
Yeah, I was in and out, but I should be good now. Brian Lund, you got some more thoughts you want to cover here?
Not really. You guys have been pretty damn comprehensive today on everything. I'm just watching where the Qs close. Sard said something earlier that's interesting. It's been this on off idea about rotation. Is it going to happen? Is it not going to happen? We saw earlier in the week IWM and Dow were stronger than the SPX and the Qs. That kind of flipped yesterday. And so I'm just watching to see if the Qs can close above Monday's high. And if we don't, then, there's a possibility we could roll over a little bit. So that's what I'm keeping my eye on. But everyone else pretty much covered everything. I do like that action in Snowflake. A few weeks ago, I did a buy right on Snowflake, which sometimes I'll do on a stock that I think is beaten down too much. I'll just buy the stock and write a call against it almost at the money, right? Just because I'm not sure it's done yet going down, and I don't want to try to micromanage it, and I just want to be able to get some equity out of it, especially if I can get a good price on it. I did that on Coin a month and a half ago. So, that's sometimes a technique that I use, but I don't know. I don't see anything super compelling today. I mean, I do like the breakout in Amazon. That's pretty sweet. I do find it the discussion about Palantir funny, right? Everyone seems to have a very definitive viewpoint on Palantir. I know people that think it's going to be the next NVIDIA, and you can't get them off that story. And then I know people that go, what do they do? So it's always funny to me when you see a stock that's that binary in the ways that people view it.
It certainly is a little bit of a black box, but hopefully we are uncovering some of those finer details so people can definitely understand what they're investing in. Chris, I saw you jumped back up on stage. What have you been looking at in this market?
Well, actually, I'm just back from ValueX Vail. Fantastic, conference with Vitaly Castanelson. And I pitched Adyen there, and I think Adyen is still a company which is, I wouldn't say undervalued, but maybe underestimated, because it's Dutch, and most people don't know it. And then if you talk about who the customers are, we're talking about Netflix, we're talking about Spotify, Amazon. All the big boys are using them. Usually not in the US, because the US is the easiest payment markets in the world. But internationally, like Netflix rolled out in 190, not 19, but 90 countries in the world between 2011 and 2018. It took Adyen about 9 days to roll out in a certain country. It took the second payments company between 3 and 6 months to roll out in a certain country. Who would you choose? And I think that if you normalize the earnings that Adyen would have if they wouldn't have invested so much in the last 2 years, like they have doubled their number of employees in the last 2 years. To tell totally contrarian, meaning everybody was really hiring like crazy in 2020 and 2021 because pandemic, and then Adyen said no, tech people are just too expensive. We don't hire right now. And then 2022 came, and Amazon, Microsoft, Meta, and all the big boys fired 10,000 of employees. And that's when Adyen said, all right, now we go in. And they doubled their number of employees, just in a year and a half. And that may sound like, that may sound crazy, but every one of the 2,000 employees that were new, that were hired, passed through at least one of the C executive people. So I'm really impressed by Adyen and what they are doing. And I think that if you normalize the numbers, meaning that you don't look at the current numbers, but at the normalized. So, for example, they have a current EBITDA margin of 41, for which many companies already would give an arm and a leg. They have normalized EBITDA margins of 65%. So, if you look at it from that point of view, I think it's very reasonably valued right now.
Some names that definitely have been on our radar as well. I think that you are hitting on the key themes here. What do you think of, I suppose, looking like farther out beyond this year? We talked about election, right? U.S. elections as an item. There's people that talk about the Fed and potential Fed cuts. What else are you eyeing, Chris, that could affect valuations of these stocks?
Great question. I think that first and for all, elections are overestimated, which means that if you look at a historical, chart, you see that stocks go up no matter which party is winning. So I think that if Biden would win, I think stocks could fall, and that would be an opportunity. If Trump would win, I think there might be a bit too much enthusiasm. I don't know. I'm just looking at this historically, and I think it doesn't really matter who wins. I think the businesses decide, and the earnings decide, and there's a slight influence. If you look at who's the president, but it's marginally. I think too many people put too much emphasis on it, and generally it doesn't matter that much. So tomorrow we have the first debate, if I'm not wrong. I think that the market could have an interesting. So suppose Trump wins a debate, stock markets go up, probably. Suppose Biden wins, stock markets go down. Yeah, it's totally possible. I think it doesn't matter, and I think that you should always take the counter position of whatever happens in the market, because if you look at the long term, it won't matter that much. Just take a look at Republican or Democrat presidents, and the stock market goes up in general. So for other, I think that by now inflation has become such a boring conversation that most people don't really pay attention to it anymore. And I think that is actually a good thing, because inflation is artificially high, because the housing numbers are actually artificially high, and the Fed should use newer numbers. Their numbers are lagging by at least 6 to 9 months, and probably longer. And housing is the most important factor right now in the 3 point whatever inflation rates. I think that the real inflation right now is more like the goal of the Fed, like 2 to maybe 2.4%. So I think those two things are important. First, elections matter less than people think, and inflation matters more. But I think inflation is lagging. I mean, the official the official numbers.
Okay, some interesting thoughts there on inflation as well. Want to bring in Logical. Logical, I know you briefly, I think, talked for a second beforehand, but I was curious if you have more thoughts on the variety of conversations we've been having today, and then also maybe any thoughts on Coinbase here.
Yeah, interesting. One, I have Amazon's one of my largest positions, so it's nice to see that finally breaking out. I mean, if you don't own Amazon, it just seems silly because even though I like to lean towards the smaller companies, I mean, I'm of the belief it's going to become the largest company in the world, and I've been saying that for a long time. And I'm pretty aligned with Stock Talk there. And also, he mentioned Shift4. I think that they had a big win today. Actually, they've been doing very well at winning contracts and partnerships with uh, big gaming stadiums and such. And so today I think they won the Minnesota Vikings stadium. So that's they continue to win. If you listen to the last earnings call, the CEO who just bought a ton of stock spent like 10 minutes on the call, literally reading off every single client win that they had in the quarter, and it just makes you feel like, all right, business is obviously headed in the right direction. Shai mentioned that the valuation is extremely undervalued and silly at this point. I agree. So yeah, it's a pretty sizable position for me. You mentioned Coinbase. I think it's just going to keep ranging, man, until every time Bitcoin. It's all about Bitcoin. It's all about crypto markets. It's all about liquidity. But like, you know, every time we get to 62K, everyone says get prepare for 40, and we get to 70K, and everyone's like prepare for 100. But it's just like until we get, and I was talking about this probably yesterday or the other day. Look, every financials company I follow, Lending Club, Affirm, all these companies, they saw that first leg up in October, similar to crypto. And then we've just been kind of basing and consolidating, which to me isn't bearish by any means. If anything, we're putting in the time now. And I think it's a good time to be accumulating a lot of these names, which is what I continue to do. I continue to add whenever we get to like the bottom of these ranges. I find them to be good buy spots. And again, I don't try to get too emotional, to the downside, to the upside. Now Coinbase is sitting at 213. People are going to tell you it's going to 150. Like, come on, man, get real. And it's just like the fundamentals don't make sense for that. Fundamentals do matter. And this is still very much a bull cycle. It's still very much an up cycle. We're going to continue to see, higher numbers, and we're going to see this bull market broaden out. That's just my opinion. That's my perspective. That's how I'm positioned. I put my money where my mouth is. Clearly, I've been early to this, and I think part of that is just because of that enthusiasm from the Fed in October. And I think maybe myself and the markets got ahead of those rate cuts expectations, and right now we're just kind of sitting in limbo. But I think that we've had a few good inflation readings, and maybe cuts are back on the table. Obviously election around the corner. When you have very bad housing affordability in this country, I think lower mortgage rates is probably going to be a prime topic in the debates. So having lower interest rates is probably going to be something that you should expect, I'd imagine. And then uh, we have PCE coming out soon. I think Friday, and so that should be an interesting one because that's what the Fed looks at for interest rates. And then lastly, and most importantly for today, because I always talk about names I'm interested in. Obviously, I'm happy to see Robinhood holding up. I'm happy to see Rocket Lab holding up. I talked a little bit about Aspen Aerogels the other day. I think that's kind of holding this 50-day moving average. I believe that's I forget which charts I'm looking at anymore, but another very interesting one today, and I've been adding to my position as this. We've had this sell-off recently. I think it's due to a large shareholder, early shareholder, exiting their position. It's Despegar.com, DESP. Yeah, I think it's down to the 20-week moving average. If you look at the weekly chart, you'll see I posted it today on Twitter. But if you look at it, it used to be resistance in the down cycle. It became support on the up cycle. And obviously, I still believe that we are very much in an upcycle. They had an extremely good last quarterly earnings. I think there's an early investor who has seen their this stock finally appreciate to a point where they could take some of their investment off the table. Totally normal. You're actually going to end up building a stronger shareholder base once those hit the float, because those people are going to be buying at a much higher average cost basis here. So all things considered, I think it's a strong buy for this company. I was saying that after those recent earnings, the price is somehow lower than where those earnings left off, even though it went up like 20-30% after. So I think this is what I look for in this market: are these pullbacks in high quality companies on no real bad news. Nothing has really changed about the business. We just get these crazy 20-30% sell-offs, which are great times to add to the positions. And I personally like to add to them with some leverage via calls and stuff like that. So, take advantage of single stock individual companies, because I think that's where a ton of the opportunity is. We've seen it's been a stock picker's market. And even though small caps have struggled, we've seen a lot of bright spots in the small caps via individual names with strong balance sheets, high cash flows, good growth, etc. So that's where I'm focused. I continue to focus there, and I continue to take advantage of these opportunities while we are in this quote unquote consolidation range, just waiting for that, in my opinion, next leg up. That's all.
Beautiful. Thank you, Logical. All right, really good stuff here. Sniper, I know you made some comments earlier on some of the stocks, but did you have more elongated thoughts on things that you're watching?
Hey. I can't hear him either.
Okay, yeah, Sniper, I couldn't hear him
Okay.
either. No one was talking. All right, there we go.
Okay, yeah. So
Maybe he was.
Topic.
Maybe we all just couldn't hear him.
Oh, he's dropping down and coming back up. Let's go over to 400K.
Hey guys, yeah, just a quick question, just while we have some bright minds in the room here. I've been kind of mulling who could be a victim of AI going forward, and I think not not that I want to short, but I just want to avoid, and I'm thinking specifically about the SaaS space. I mean, we all know Google could potentially be disrupted with like an AI search, for example, but I think there are probably a lot of things that we haven't thought of yet that will end up being disrupted by AI. I was just wondering if anyone has any thoughts of basically companies that they would worry about, in that, ideally would not want to be positioned there, and who knows, maybe I am. So I'm just curious if anyone has any thoughts on what could be disrupted going forward. I mean, this is probably 2, 3, 4 years out, but at the rate of change with AI at the moment, there's certainly going to be some big changes that we are difficult to foresee. So yeah, appreciate thoughts if anyone has any.
I wonder what happens to Adobe. If Adobe becomes a monster that eats everyone, or becomes beaten by all the stuff and the power of it.
Yeah, no, very good point.
All right. If you are a big company, an enterprise company, will you use Adobe, of which you're sure that everything is cleared, meaning copyright, etc., or would you just use general LLM? I think you know what to choose, right?
I think you choose Adobe right now, but we'll see. I think it's what AI will end up being is an equalizer in a lot of industries where you'll need to kind of adapt to it, and some really great companies with good management will adapt, and those ones will survive, and the ones that don't adapt are going to fall behind a little bit. I think that's going to be a thing across a lot
I
of
totally
industries. Management.
I totally agree, but I think that if you look at the advantage that Adobe has with enterprises, I think that only will, be multiplied by AI. I think if you are an enterprise company, if you are Microsoft, if you are like Google or so, maybe Google is a bad example, but if you're an enterprise level, at an enterprise level, you will use Adobe because you know for sure that every image that is generated by Adobe is copyright checked. which is not the case by everything else. So I don't think that will change fast. Maybe if you have other
The
information,
truth is,
correct me. But
no, the truth is, people always get super excited about new tech. This happens so many times. People have some crazy expectations right now. We'll see what happens, but I feel like very rarely do they happen as quickly as some people think. The bubble, the
oh yeah, for
dot-com bubble
sure.
happened, but some of those massive companies are still here, and the internet is still in its infancy stages, and maybe this is something similar for
Exactly.
AI.
Was it?
I think so. I mean, if you look at the dot-com bubble started actually already in 1995. I was one of the few people probably that had internet in 1995, and it was massive. The same experience as with large language models right now, meaning it's so exciting. It feels like a new era. But before you have everything built on top of that new platform, that takes years. And for the internet, it took about probably 15 years before the full potential was visible. I think for AI, it will probably take 10 years because every revolution goes faster and faster and faster. But I think that you cannot you cannot tell yet who will be the winner of AI yet. I mean, it's very typical that the big companies look like the big winners initially. That has always been the case, but there will be new companies built on top of the new platform that will, be the new winners. And that's really,
Hey, sorry
undecided
to
yet.
interrupt. Micron earnings are out, by the way. Looks like revenue was 6.8 billion, beating expectations of 6.67 billion. Looks like EPS was 62 cents, beating expectations of 53 cents. So at least they're both beating top and bottom line for Micron. What's the stock doing? If one of you guys could look.
It's down
It
about
was down.
7%.
Ooh, interesting.
Down $10. Yeah.
I'll continue digging in here, see some stuff. But yeah, sorry for interrupting.
Those are some great points, guys. That was an interesting thought about Adobe, because I used to be a professional photographer, and there was nothing worse than the back end editing, and I hated it, frankly. And so if there was AI that could deal with that and just optimize photos for me, I would gladly have paid a ton of money to have that dealt with. So I could definitely see, certainly the consumer side, like wedding photographers and those types, taking advantage of a different product than Adobe in the future. I mean, I currently pay $50 a month to Adobe just for Lightroom and some things, and I would rather not, because I think there'll be good solutions going forward, as they would adequately edit photos. But yeah, so anyway, good thoughts. Thanks.
Micron did give forward guidance. I'm trying to find what the estimates were. Shai, you normally have that pretty quickly.
I'm looking for it too. I can't
I
find
have
it. I
the
know.
7.6 billion is what the midpoint is. 7.4 to 7.8. So we'll see on that one, but stock is moving lower.
It's honest. It's not that big of a move lower, so we'll see.
Looks like the expectation was 7.6 billion, and for EPS, $1 to $1.16 is what they said. $1.05 was expectations. So decent enough forward guidance. This might be a tale of the story of it didn't. It was a stock price to beat, and it didn't beat.
I mean,
Yeah,
it's
it's
not
up
total
70%
destruction though.
year to date, Up 70% year to date, bar is very, very high for that. So they probably wanted a little bit of a better guide here, I would imagine, or a little bit more aggressive guide, because that Q1 guide was very aggressive. So they probably were looking for a bigger guide here on this one. Semis are reacting pretty much immediately to that. The rest of the semis, you're seeing, pretty much across the board. NVIDIA down about 1%, SMCI down 1%. The close sympathies like Western Digital and Seagate are down more. Western Digital is down almost 3% in sympathy, because obviously, they have direct overlap from the product side.
I would watch this possible reversal though before the
Yeah,
open.
definitely watching it. It's down it's gone from being down about 10% to being down about 5%. So has recovered from the lows quite a bit. We'll see. When is that call, Evan?
Let me check Earnings Hub.
Oh yeah, and we will be listening to it on Earnings Hub. So,
well, I mean, it says 6 p.m. Eastern. Yeah, we're not listening down here, but you can listen to it yourself.
Never mind. No.
As long as Morotra doesn't screw this up. I'm short 125 call puts expiring this Friday, so they rattled my cage there for about a second and a half, but I think we're all right.
If you're short 125, but even if it opens at 125, you'll probably be all right.
Yeah.
You got Josh coming up. And Micron is moving higher. But yeah, what's up, Josh? How you doing?
Good. Real quick, do you guys see there may be a coup going on right now in Bolivia? Seeing a ton of accounts post about it, but no news article. Not
It's your
super
geopol.
relevant stock-wise, but interesting.
We have a guy who's part owner of a geopolitical account on Twitter up here.
Yeah, I'll text Dimitri right now, our guy who runs it, but he's very tapped in. For those that don't follow him, you should go follow Dimitri. But he's been a professional geopolitical strategist for a long time. He runs that page for us. I'll send him a message right now. You'll probably be able to give a good answer on that.
Type in Bolivia in your search, and you'll see there's all this.
Yeah, I'm seeing it.
These different. There's Associated Press.
Yeah.
Bolivian president warns of a regular movement of troops in the capital. So anyway, that's verified. It looks like at least that there's an attempt. I don't know what the implications are. I just I was listening in on this and saw that and was like, hey, maybe you guys would find it interesting.
It is pretty crazy. Kind of out of nowhere. This is like I've kind of seen generally knowledgeable on kind of the conflicts around the world. This isn't really one I've heard too much about.
Yeah, I've been posting about stuff in Middle East and North Africa where there's like actual like conflict. This seems like it sort of was out of the blue. The people that highlighted this for me, I don't know, like very recently, but 15, 20 minutes ago, they were saying there was some issue. The Bolivian president had like been very publicly anti-U.S. or something, and U.S. history of reported involvement in coups in South and Latin America.
Allegedly.
Bloomberg just tweeted that the palace has been stormed by soldiers led by the top general shortly after an armored vehicle crashed into the building. So I'm going to go ahead and say yes, that's happening. There's also a lot of videos.
Yeah, no, I know. I'm actually seeing one right now too. Interesting. Well,
how big is Bolivia?
I know the U.S. just played them in the Copa America and won.
Okay, that's not helpful.
Yeah, Evan, wow, great context there. No,
12 million people, very big physically, but only 12 million people, $10,000 per capita GDP, 125 billion total GDP. It's not very material. I don't know what their big sort of exports are or whatever, but it's also possible with this sort of thing, if it's a military coup rather than like a civil war, it might actually not be that economically disruptive. I know it's like sort of a radical thing to say, but it might be the military takes over and it just sort of ends up like people go to work tomorrow and that's it.
A lot of tanks is what I'm seeing.
I was going to say, are SQM and ALB, are they south of Bolivia? I guess they are, hey?
Yeah, the Lithium Triangle is a little lower, South America, I think.
Okay.
A lot of these South American stocks have been very hot traders in the past year or so. So I imagine you'll see some market reaction in those names tomorrow.
Wait, is Bolivia the part of one of the three countries in the Lithium Triangle?
It's not far. It's close. Yeah.
I'm looking at the map. I think it might be.
Bolivia is in the three countries. Yes.
Okay, yeah. So
it's Argentina. It's Argentina, Chile, and Bolivia.
Is there any like lithium names that are in that area?
Most of the production capacity for the publicly traded ones is concentrated in Argentina, but there is some capacity there. It's funny because those names actually traded higher today of a couple reports as well. So maybe it ends up being a supply concern, maybe it ends up being a production concern. I don't know. See how the market reacts to those.
This could be incrementally positive for broader LATAM stocks in the sense that if it is, again, very early, but it sounds like it reads like it's a the military sort of rebelling against a left-wing government. And so if there is that sort of, and there's been a little bit of that movement after some elections, I guess a year or two ago, that were sort of moving Latin America and South America more left-wing, more socialist, communist, and so on. So if there is that little bit of shift back towards the center, it could actually be stabilizing. I know it's weird because it's a military thing, but it could be stabilizing for the broader region and could actually help reduce risk. Like if you're a socialist president in XYZ other country in the area, you see this and maybe you start to moderate your economic policies a little bit to encourage economic growth. So it could actually be positive for stocks in the area. I don't know about tomorrow, but like over time, it could be positive.
The bull case for military Qs.
I'm not advocating for them. I'm just trying to figure out what's going to, again, not a humanitarian thing, purely economic.
What's up, Shy? You watching this?
The uprising or Micron?
I know, right? Two equally fascinating topics.
Yeah, so geopolitical stuff, honestly, that's so not my lane that I just probably have no insightful input at all. I just hope everyone gets along. That's just my 2 cents. But for Micron, I do have to listen to the call because this is weird. They had a big miss on their cash. Estimates were 3.2. They came in at 2.5. They also had a bump on their R&D, which didn't help the OpEx. But yeah, it's weird. There's no way Micron's gonna have 1 quarter pricing power, which is the previous course. Like, I'm wondering why they didn't have that home run type of earnings, or what even happened to that cash flow.
Estimates just came up a lot. I mean,
That's
right?
what, yeah,
They took a
that could
big
easily
write
be it.
down too. They took a big write down too. I'll get the number, but it was a pretty significant one. I think they're winding down a factory, which might be a reason for that disconnect when it comes to the impairment.
Yeah, and the run that we saw from like May to, because when I first got into the stock back in January, the street was pretty neutral on it. You didn't have like a ton of analysts jumping on the boat, but and Kevin, you kind of brought this up yesterday. We saw a shit ton of analysts upgrade the stock going into the report. That run it had from May 31st through June 15 ish, from like 120s to the 140s. That run was on upward revisions of estimates and an insane amount of upgrades. Like every shop on the street, I think, was bullish. So that, it's kind of a self-feeding cycle, right? It's like stock goes up a lot as the estimates come up, and then when you get the report, yeah, you might have to take 5-6% off the top of that move if it's not as crazy as people expected. But I mean, even with this move down, I think the stock still looks fine. This thing could drop 10% over the next 2 days and still be up 50 plus percent year to date. Not even over the past year, just year to date. So yeah, I mean, look, that first quarter was amazing. The second quarter, the estimates came up a shit ton going into the report over the last 2 weeks. So that happens sometimes.
Yeah, in the last
Looks like they I'm sorry.
No, just the last 3 days, 3 pretty significant analysts all raised their target prices. Joseph Moore over at Morgan Stanley, Tristan Guerra over at Robert Baird, and Toshiya Hari at Goldman Sachs. All 3 of them rated 5 stars by tip ranks. So there was a rush into these earnings, like you said.
It looks like there was a spike in R&D spend too, Shy.
Yeah, I saw that. Which is a good thing. You want these kind of names to have some spike in R&D this early innings of the AI move. But I hear you guys what you're saying about the analyst expectations. I'm annoyed I didn't keep track of that. That's one thing I never really do that I probably should start doing right now, of the estimate up visions the past couple weeks. Totally missed out on this one, but yeah, this is interesting. I did think they'd guide up more, but again, that could be an estimate issue. So I should look at my notes to see what I previously had as the estimates on why I thought they're going to beat by like 600 mil.
By the way, Jensen and the CFO and whatever just sold more shares again as part of their pre-planned trading plan. So we know when these are going to happen, but still sold more, 240,000 more shares. We didn't talk about Rivian at all today. Stock Talk, that kind of broke on the Spaces yesterday, and obviously it took a little bit to actually get the details of it. It's not quite. It's still. Let's hear
Yeah,
your thoughts on it. What's the updated
we talked.
thoughts?
Evan,
What's
you
the
and
more
me were
info?
on another Spaces
Yeah.
last night with Omar, right? Where when the 8K came out, I mean, I changed my mind on the deal. I don't know if you did, but for anyone that saw the 8K last night, I mean, when we talked about it on Spaces, the headline sounded pretty bullish. $1 billion in direct injection plus an additional up to $4 billion for the JV. The article and the headline sounded great. Once we looked into the details of the 8K, I mean, this is effectively a fancy raise of capital. They're giving up, for that $1 billion, they're doing half of it as convertible notes with a 4.75% rate, and they're doing the other half at the 40-day average weighted price based on when those notes convert. So, I mean, it's a fancy capital raise at the end of the day, and yesterday I kind of viewed it as this unilaterally big thing, but today, I mean, I think my take on that has kind of softened a little bit. I think net it's still a good thing, but this isn't the deal that I thought it was. And I think Omar brought up a great point about this last night as well on that space that we were on with him, where he brought up the Ford deal that they did years ago that was actually structured very similarly. It was a much smaller amount, it was 500 million instead of up to 5 billion, but yeah, this deal isn't as unilaterally or obviously bullish as it seemed from the news article's standpoint compared to what was in the 8K. So, yeah, my opinion on it has softened pretty dramatically based on that conversation we had last night and the details in the 8K. So, yeah, I think this is at the end of the day a fancy capital raise, and it may speak to an element of desperation, frankly.
Though
Um,
I think
you
we
know,
kind of knew. But what I will say is I agree with you. I think it's kind of was priced into the stock that we're going to need to continue to raise capital. And the
that's fair.
question is, was this
That's a good
a
point.
better way to get the capital than what was already priced in?
Yes, that's an excellent point, and I actually agree with you on that. Yeah, the stock was priced kind of for this idea of insane cash burn, so that's completely fair. And was this a better method than just like a straight up, offering? Probably, yeah, it probably was. So
I think it
I'll
made
give you
sense
that.
to walk back the move, though, for sure,
No,
from that where it was.
yeah, exactly. That was my point.
Yeah.
Was just like, because some people in our community were asking me this today. They're like, "Oh, are you surprised in it coming off the top?" And I was like, "No, based on the details in the 8K, no, I'm not." Because I think that move after hours we saw was just in reaction to the headline, right? Which the headline sounds crazy good.
Whoever
Volkswagen.
is their PR guy, I want to know and learn some stuff from them because they're great. I mean, they're at Rivian. I mean, that was a great spin.
The PR guy really, yeah, he really sold it,
Earned some money
well.
there.
But
Yeah.
once the 8K comes out, I mean, you can't help but people picking through it, right? So, um, yeah, no, actually, I'm glad you brought that point up because I agree. Strategically, was it the right decision? Probably. It's better than a straight up capital raise. But am I as excited about it as I was when I read the headline? No, definitely not. I would argue that maybe I'm even not excited about it really at all. I think it's a good thing for them from a cash burn standpoint. It gives them some runway. But with that $1 billion, they're buying themselves what? A quarter's worth of time? Right? They're burning $4 billion a year. So I mean,
I think
do
from
we
their
expect
perspective, then the numbers that I think what the Rivian Bulls will say is like they were expecting to get the spend down drastically this year. So what that cash could actually do for them is different when you give them a quarter or two, is what I've heard the other side of it say.
that's fair? That's fair. I mean, yeah, look, if they can make operational and logistical decisions this year that fundamentally change their annual cash burn, then yeah, now we can start having a different conversation. I mean, you can
But we're
even make
not
the
there yet.
argument that maybe there's some benefits of, I mean, I don't know to what degree they're going to partner in terms of supply chain and production, but you could argue that if they do, there's some benefits to their intimacy with Volkswagen in terms of scale. Maybe that brings some cost benefits peripherally. I mean, I don't know. I'm spitballing here, but yeah, I'm sure you can make a case that their their operational profile is going to improve by the end of the year. If that happens in a meaningful way, combined with any strategic advantages from the partnership, yeah, maybe net it ends up being a good thing. That's why I want to say that. Like, look, I want to caveat what I'm saying with I think net they're in a better position than they were prior to announcing this. But in a vacuum, if we're looking at the deal, the kind of pound, I don't want to say pound the table, but the kind of definitive positivity I had yesterday when we were talking about it is a lot different after reading the 8K. So that's really the point that I'm making, just for me personally, from looking at the deal in a vacuum.
I think this also like really puts into effect how markets work and how everything works. You get the initial headline out, there's the move, and then everyone gets excited, and then you read in and you digest it. And then what actually happen. I think it kind of goes to the point of like, hey, if you're that long-term investor, or if you're not that person who's like trying to get the second in there, you have that night to like actually dig in and wait, and you don't have to buy the second something happens. We see this on these earnings reports a bunch too. Like the numbers will come out, stocks up 10%. Then the forward guidance hits the wires a little bit below expectations, stocks down 5%. It's just interesting sometimes, and you have the luxury of giving yourself at least a little bit of time to digest the moves. At
Yeah,
least
I
that's
mean,
how I feel.
I think one interesting thing that came out, or one narrative that might have come out of this, I mean, everyone saw the monster move in Tesla today. Stock was obviously setting up technically anyway for a move, but you can make an argument for whatever number of reasons why you think Tesla went up today. But I think one of the reasons could be the same reason we saw a big jump in Mobileye, which Shai brought this up yesterday as for Mobileye as a potential sympathy to this deal. That stock was up 8% today, and Tesla up 5%. But I think if you comb through the statements from the Rivian CEO last night, and you comb through the official statement from Volkswagen, I don't think it's outrageous to make the kind of narrative spawning thing that, hey, maybe legacy OEMs are starting to realize that they have a serious deficit when it comes to software. And it seems from Volkswagen's perspective that this was primarily a deal for them to get a software system developed internally by Rivian for use in their electric vehicle programs. And if that's the case, then that is, if that narrative is true and other legacy OEMs are thinking this way, then that would be bullish for Tesla and Mobileye. But more importantly than that, I think this has been kind of cemented already to a degree, because if you go look at Ford CEO's Jim Farley's comments from last year, there's like this interview he's doing when they first came out with their whatever they call it, Blues Cruise or Blues, whatever the hell it's called, their self-driving system. I think it's called Blue Cruise, but he was demonstrating it.
Well, it said Blues Cruise.
I
Come
mean, I
on.
think that's what it's called.
You like watching Blues Clues?
Is it the
We
TV show?
Look, I
clearly
liked
know
Blues Clues when I was
what
growing
Stock
up,
Talk
but
used to watch.
Are you
whatever.
still a fan?
I
Blue
mean,
Cruise,
it's not bad. I'm more into Sasha and the Bear now these days.
great taste.
Bluey. I'm a Bluey guy now.
But my point is when Jim Farley was demonstrating the software last year, he did a good interview, and it's actually worth going back and watching for anyone that's interested in that kind of stuff. But he was doing an interview and talking about legacy OEMs penetrating the electric vehicle industry and all the challenges they'd faced and blah, 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 blah. And they get to the point about software, and he literally says, word for word, he says, for the last 25 years, all of us in the legacy vehicle industry have been, in the legacy internal combustion industry, have been relying on a handful of third-party software providers who service all of our vehicles and who provide software for all of our vehicles. He's like, it's basically just white labeled software from 2 or 3 global providers that they were plugging into ICE vehicles. It's why you think back to cars from the 90s and early 2000s that your parents might have had, or for those of you that are older, that you might have had yourselves. You can remember in that era that like almost all the software programs were pretty identical outside of the initial little image you used to see or the logo you used to see. And it's because they were all coming from the same providers. And so what that 20 years of reliance on these third-party software providers, and very basic software at that, did is it lulled this industry into complacency when it comes to developing their own software programs and their own software talent. And so entering the digital age of vehicles with electric cars, which is really what kind of ushered in together, right? This idea of like vehicles becoming more and more digitized and more chip centric, and the electric vehicle revolution were basically, coinciding, overlapping trends with the car industry. And when that era came, these guys realized we're not good at software, and that was one of Tesla's competitive advantages very early in the race and helped them get such deep penetration in the North American electric vehicle market. And now these guys are probably looking back saying, how much better have we really gotten in the past year? Right? Are we really meaningfully better at software? Like, would any of these internal combustion engine entities label themselves as software companies? I don't think so. So I think to a degree, and maybe I'm extrapolating too far here, I think to a degree this was a concession from Volkswagen, because keep in mind they already have electric cars. It's not like they haven't been able to make them. I think this was a concession that they need a natively developed software platform for their vehicles that's good, that's modern, and like that's sophisticated. And I think you'll see that from other OEMs too, is the point I'm trying to make. I don't think Volkswagen is the last one to sign a major deal in this industry when it comes to software. I think most of these other guys are going to realize they can't snap their fingers and spawn a software unit overnight, a quality software unit overnight, the same way they couldn't snap their fingers and spawn electric vehicle factories overnight, like many of them thought they could. And so I think you'll see that dynamic play out in the industry more.
I mean, I guess, are we giving credit to Volkswagen for really kind of making this big move first?
I give them credit. I give any company that's wanting to enter a cutting edge industry or a new industry that is willing to make concessions where they should. I respect that, because it's a hard thing to do. All of these guys have. Volkswagen is a pretty big war chest. And we were talking about their cash pile last night. I forgot the exact number, but Volkswagen is a pretty big war chest. And you look at some of these other guys, and they had the capital to do it initially. So, I mean, this isn't just purely a matter of capital infusion. There is some level of execution and talent that's involved in this, clearly, right? Because, I mean, look at what the results have been in the past 2 years. So, yeah, I always give companies credit for making concessions if they have to. I'd like them to try first, and Volkswagen did try. But if you're willing to make that concession when the time comes, I respect that.
All right, Paper Gains. I know this is a name you were following pretty closely, so I'd be curious to get an update on how you manage your position today and your thoughts on it. And then
Wait, what ticker?
Rivian.
Rivian. No, I
Rivian.
think Stock Talk did a good job. I didn't see the AK, but I don't. So as a technician, I don't need to see the AK necessarily to tell me what's going on. But I think that the pullback was perfect. I think that the storyline, to me, Stock Talk hit it on the head, right? The before mispriced as a Lucid 2.0. Now that story has to change. Is there still a possibility they go? You betcha, right? Like that doesn't change. But is it as immediate as it was priced for? No, right? So I think that's what can happen. That's the big change. That's what I was looking for. Honestly, it hit my near term target and extended, so that's fine. I'm actually in it more for from here. There's still earnings to go. The last earnings call, they beat revenue. I think that's what that looks like is probably going to be the next leg. This can go into a massive consolidation from here. So personally, I sold a little shares last night, not a ton. It was just I wasn't in it for short term cap gains, but it is what it is. And today I sold some August $20 calls against my equity. So I think it will go into that kind of range bound thing. If it goes much lower, I mean, you got to say, look, the next higher low could be as low as 12, but I don't think that's. I think that this goes into a heavy consolidation at this point. The short float is insane, so we'll have to see over the next couple days. I don't know what the days to cover is, but over the next couple days, anybody that really had like a large short position there and thought that the company was going bankrupt in the very near term or going to go under in the very near term really has to change that position. But in terms of, is the juice still worth the squeeze? Yeah, I think so, because the probability of it going bankrupt tomorrow is just not, it's not really a thing anymore. So and the way that they did it, yeah, hearing Stock Talk, I agree, right? Like, it could have been another cap raise just like they did the last time, and that absolutely destroyed the stock. And so I'm happy that this is not that. It doesn't make it as bullish as before, but it's still not, it still changes the underlying thesis of what was going on with the stock. So now it's kind of like the show me story. And so I got to see on the next earnings report.
So
you're talking about Lucid, right?
Yeah,
Rivian.
sure.
Okay.
And by the way, Rivian's never been a trade to like, oh, is this the next Tesla? No, right? It's not the next Tesla. It never will be the next Tesla. That's not what this is about, right? Like, this is about just a simply undervalued. Could it, if it survives, what's the potential in 5-10 years or whatever? If it's still around, it's a whole lot more than where it is now.
Ooh, banks are moving right now. Fed says
the
banks
stress test
pass
came out.
stress test, paving way for higher payouts. Fed banks reported higher losses than in 2023 stress tests as bank balance sheets are riskier and expenses are higher.
I think
JP Morgan's up about
right too.
JP Morgan's up about 0.8% in after hours.
Yeah, certain ones are down. Certain ones. Wells Fargo down. What city down? North City's up. Bank of America down. We'll see some choppiness tomorrow.
Interesting. So I guess this was a known thing. We knew that there were this stress test data was going to come out today.
Yeah, we knew this for the stress test for months, and they kind of set it up so they pass every time. It's, I think, probably only one time in history where they haven't passed it, and they were kind of just setting themselves up to just raise banks to raise capital. But there are 31 banks in the stress test. This is an annual exam. It happens every year since the 2008 financial crisis. It affects banks with at least 100 billion in assets, and obviously, JP Morgan's doing well because they're a very conservative balance sheet, but it makes sense for Bank of America, Wells Fargo to be a little bit more sensitive given their exposure to mortgages and bonds. But it's really the upper mid tier firms that people want are likely going to be focusing on. It's not like the 3 or 4 biggest banks that are really even going to matter in this. But for now, at least, this looks to be priced in. And sorry, just on Rivian, I mean, I know that we might have an audience that's biased one way or the other, but the deal really wasn't that great. Like, when you look at converts that are issued, they're usually issued at a premium. And this one, if you go through the press release, 50% of the first 1 billion tranche was struck at like 1083, 1084, which means that Rivian was distressed entering those negotiations, which should have been obvious to everyone. So after the close, we actually shorted it around 1854 and covered at 15 this morning. It just anything can happen, but they've tried to partner with Ford, right? Ford sold all their equity, right? They partnered with other firms. It hasn't worked out well. They have 3 models with decent traction, so they have that going for them. So it's too early to call it a Tesla competitor, but I see them driving all over Florida. I like the design. People do like the car. The main problem is that 1 billion doesn't fix a lot, right? They burned 5.6 billion alone this year. And keep in mind the other 4 billion isn't guaranteed, right? They have to agree to it in the fourth quarter, based on Volkswagen's continued due diligence and approval of specs. And I think Volkswagen came into the deal because they've done a terrible job with their own EVs and with software. And Lucid just has done a much better job. This is a way for them to essentially steal Lucid's technology, and then on the back end, promise them this JV. So it isn't really guaranteed. Right now I'm flat. I don't have any exposure at all. So just speaking my mind, I don't think that it's really that positive of a deal until you get more color in the fourth quarter. Now, if they approve it and they, you have this $2 billion tranche and they do deploy the 4 billion, it does stem about, half the cash flow burn at the company that was expected over the next 18 months. But it frankly still doesn't fix the problem at the company.
Hey, can I ask you a question though? Because I think
Sure.
the important thing here, because anyone who would have followed Rivian before this would have told you they're probably going to need to raise more money. And we were kind of talking that was basically priced in here. So I think the question here is
No,
this a
I
better
disagree.
capital, you think?
I actually disagree. I don't think it was priced in. People say that a
I
lot.
think it was.
You know, when you say priced in, you're implying that the company was priced for bankruptcy. It wasn't. Yeah, I've been a bankruptcy guy for 20 years. This company was not priced for bankruptcy. It was priced for a bailout. I mean, I actually own some of the stock at 10 as just a call option. So to say that this was priced for bankruptcy, and people have to understand when a stock is priced for bankruptcy, um, you'll see the bond, like the Rivian bonds, right before this, the converts were priced for stress, right? They weren't trading at a 25% yield, right? If they were, I would say, okay, this is actually priced for bankruptcy. The way you know if it was priced for bankruptcy is where the bonds are trading. And if the bonds were trading at 50 cents, I would say, okay, yeah, this was definitely priced for bankruptcy. I would say that there is a considerable probability of a restructuring or a default or another capital raise priced into the equity, but it wasn't priced for a full default. So on the incremental side, I agree with you, Evan. It is positive, but is it positive? I mean, just think about the amount of guaranteed capital here is frankly only $1 billion right now, right? The rest hasn't been approved.
Just that 1 billion though. Like if Rivian were to go to a
That
bank,
1 billion
what would this look like?
that 1 billion is 70 days of cash burn. I
Yeah.
hope you guys understand that. It's not a lot of money.
No, but my question
It's
though, but if they were to get this just from a bank, there's no partnership here and anything, what would that capital raise have looked like? How would this compare to
I
that?
will tell you how it would look like. The market right now for private credit is SOFR plus 550, right? So it would be 11% paper, whereas this is 4.75% paper, but they're also giving up a ton of equity upside, right? They're diluting the company, was it 50 million shares? I'm not looking at it right now. I'm not in front of my computer, but I would say if the right thing to do is not to compare it to a bank raise. The right thing to compare it to is, the other convert issues we've seen over the past 2 years. They're normally priced at a premium. So there's usually a straight bond component, let's say 3 to 5% coupon, plus, they're issued at a strike like 25%, 15 to 25% above the stock. So I would say compared to other convert deals, this was actually priced at a distress level. It's hard to just look at and say, okay, where would a straight bank deal be priced? Because these guys would have never gone to a bank and priced the deal, because they would have always done a convert deal. But the convert deal, the way it was priced, it was priced probably 20% lower than a healthy company would have priced it. Does that make sense, everyone? Like when you price a convert, you price a lower coupon
No,
because you give up
I think
upside.
it makes sense, right? But
Yeah.
to your point earlier, at $10, it was a call option. That's where we're entering. So, and the story is just not as bad as it was, right? I don't think there's any
No
question.
one's saying it's
Is
as
it a
bad. Like
distress?
when a
Is
company
it
raises money, it's not negative, right? And when a company
right?
raises money, it tends to be positive if it has any probability of not existing. What the point here is that it wasn't pricing an imminent default by any means, and the capital raise that they did wasn't optimal, and there's no guarantee that they're going to get the other 4 billion.
Yeah, I think it's just so wrong terminology for me, but I'll just say it just the price action is it's not as bad as feared in the stock price. That was the reaction, right? It
Well, the
could have been
stock, I think the stock did really well because of the short covering, because there's a
right.
16% short interest.
It's massive.
I don't think necessarily, that the stock price after hours represents what the stock price is going to be 3 months from now.
Oh no, no, no. Yeah, agreed. Right, violent agreement never does. But I think again at $10, it was a good bet, right? Like a call option. And now it's time to take a little profits. We'll see if it, it's a show me story now. I don't know. I don't think it goes anywhere, quite frankly, from here. Um, we'll have to see. But it's still a distressed company. That's definitive. It's just the raise is not like the headline. It's not at the same time. It's like, okay, somebody's seen something. regardless of whether or not Volkswagen has the best track record. They obviously they do not. You know, so we'll have to see. I think the it's just going to be about next quarter revenue, sales, and if these new models are actually able to make a dent in cost efficiency. We'll have to see.
Omar,
That's how I've seen it, at least. I didn't realize Jay was up here. Or was that Jay or Omar?
Oh, yeah, it was Jay. I just joined because I saw you guys. I saw the headline about this Bolivian thing, and I thought it'd be fun to listen in. They had this fuel shortage. You guys have probably followed this, where they don't have enough fuel because of policy for buses, for tanks, for the military, and this military leader just got frustrated with the president and basically stormed the presidential palace. Very, very bizarre. I mean, what's happened in Latin America over the past 3 years, it feels like it's a third world, these are third world countries. It's very sad what's happened in Venezuela. I don't think Bolivia is nearly, as bad as, what we've seen happen over there, but it is very surprising to see.
yeah, that one has. I have honestly definitely not the expert in that area, and it seems to still be unfolding right now. I don't know, but yeah, we'll keep an eye on that one. I don't even know. Stock Talk, was that you who put it in the title? It's a good title.
Yeah, I was curious to hear it because I've invested in sovereign bonds for a long time, and I was invested in Argentina bonds and was involved in a couple sovereign restructurings in the past. It was, it's still playing out. We don't really know anything about how it's going to play out. But you guys should probably go back to Micron and the outlook and everything. It started to interrupt.
No, you're
No,
good.
we covered that pretty well.
Yeah,
Yeah,
we
you're good.
appreciate you on the
Good.
spaces. Omar, you have any thoughts on the conversation that we were talking about here? Honestly, me and Stock Talk were saying that space you did last night. We were hanging out and kind of helped shape some of our thoughts and understanding of that Rivian deal a little bit more. Good PR team.
Yeah, I mean, I thought the deal sounded great until I actually read the details. And then you look at it and it's like, they said on the call that they negotiated for months. It took them 3 months to negotiate the deal, and they got 2 months of runway out of it. And the stock jumps 50% after hours over an additional 2 months in runway. I mean, they don't need $1 billion of capital. They need $1 billion in free cash flow. And I think it's going to be look at the pricing environment for EVs. It's very challenged. Even if they get to gross profit positive as expected, they have 957 million in operating expenses in the first quarter. So, I mean, they they're really in a situation that is very challenging as they try and ramp this new vehicle, the R2, the $45,000 vehicle, which I think kind of Osborne sales of the R1. And you look at their history of partnerships as I started researching more into it, right? The Ford deal, the Mercedes deal, where Ford decided to use their own technology rather than theirs. There are some parallels with these other sort of joint ventures they've done to try and raise capital, and they usually haven't worked out. And you read Volkswagen's press release, and they're very clear. The joint venture, if we decide to do it, is going to be conditional on one, diligence that says that this can actually be used in our vehicles, regulatory approval. Even $1 billion is 10% of the market cap at the trading levels. That's going to require CFIUS approval, obviously, to go through. And, so they say it's conditional on regulatory approval as well as ongoing negotiations. So that'll hopefully close in the back half of the year, but there is always a risk that it could not close. And the way they're talking about it kind of like a done deal. And, there joint ventures have rarely worked well in the automotive space, especially not for Rivian. And there's just a conflict, right? It's your competitor. And they say the moment we set up the joint venture, you have an immediate transfer of all of Rivian's IP on the electrical and electronic infrastructure to Volkswagen.
It's an IP grab because Volkswagen
Yeah,
software is terrible.
exactly. Cariad has been a disaster for them. So, you start to look into it, you see, oh wow, $5 billion. That sounds like a big number. That could really get them through. But then you see, okay, well, actually, it's a $1 billion convertible note at a 4.65% rate. So, for Volkswagen, it's probably very little difference in their treasury. They're still getting paid interest, and they have to hold this convertible note at least until December. So they're going to be getting at least $20 million of interest on that convertible note before it converts into common shares. So then they convert into common shares, then they're putting another $1 billion in the joint venture. But obviously, any tech produced using that $1 billion with the joint venture is going to be 50% owned by them, the equity in the joint venture. And then they're going to supply $1 billion of debt in 2026 to the joint venture. And then the 2025 and 2026 convertible note investments that are going to follow the 2024 issuance, they are conditional on milestones being met with the joint venture, which is probably to say you have to actually transfer the IP to us, or we're not going to make those follow-up investments. So it's not even 100% secure, right? I think if business conditions materially worsen, then they may decide they have cold feet or don't want to do it. I think they're kind of circling this. If things don't go well, let's say, market conditions worsen, you look at auto inventories and dealers, they're piling up, right? If they can't be competitive, they can't be profitable, they have less demand than expected, then you could see a situation where Volkswagen actually ends up with a majority control of the company just following the terms of this deal. If they follow on with, an additional $1 billion investment and another $1 billion investment, at the very least, they're going to be the largest shareholder. I think the largest shareholder right now is Amazon at 16%. So, it's obviously, we don't know what the price is going to be, but they'll obviously be a major shareholder. And it's possible Bloom is just thinking of folding it in. Now, that's a path that could actually work, I think, for the company. Surviving it as an independent company seems challenging. If they were to fold it into the Volkswagen Group, they could probably do that pretty well. Get rid of a lot of overhead, merge things together, maybe ramp down production a little bit and kind of salvage it. So that might be a possible sort of exit strategy for them if they're not able to make this work as a standalone business.
Yeah, I mean it's pretty cheap R&D, right? When you think about it, paying $1 billion and getting all their EV IP and not taking that risk. And I mean, they would imagine how much Volkswagen would have to spend on their own R&D. It's probably way more than $1 billion to set up everything that Rivian has set up already.
Yeah, this is all about software because the legacy OEM guys suck at software, and like they always have. And Jay, before you kind of came, that's kind of the point I was making, which is that even Ford's CEO has conceded this, which is that they're just not, they don't really have comprehensive software departments. Like none of these guys do, outside of Tesla. And so, yeah, this is kind of just a hope that they can leverage Rivian software in some way effectively, and it didn't work for Ford, so we'll see if it works for them.
On Ford GM, there's a really interesting thing just comparing 10 seconds on those two companies. So when GM announced its like $10 billion accelerated buyback in November of 23, just look at the stock chart for GM versus Ford from the end of last year to today. It's their operating performance has been very similar, but their stock performance has been 30% better. And in the last 50 years, there's only been two times where we've seen over 6 months that wide of a price difference between those two stocks. And it just kind of shows you the power of capital allocation. So GM just announced another, I'm not long, but they announced another, $6-7 billion buyback in the first week of June or the second week of June. And it kind of just shows that right now when interest rates are this high, and it's frankly the case most of the time, companies are rewarded and they trade at high multiples in most industries when they are in the process of returning capital to shareholders through dividends and buybacks, and not when they're in their investing phases. So, the market discounts uncertainty on the ROI of capital expenditures. Similarly, when you saw like Intel ramp up their huge investments into fabs, right? The stock underperformed, for a couple years. It's just an interesting observation because it's one of the really pure examples you can see, because you can compare two U.S. auto OEMs and look at their performance over 6 months, with one announcing basically 3 buybacks and the other doing nothing. And as a case study, if you guys want to look at it, I would highly recommend just going through the filings and looking at those two companies.
Sounds like someone's unmuted.
I saw Chris unmute. Wasn't sure if you had a thought
Yeah.
there.
Yeah, well, yeah, I unmuted by accident, but it doesn't mean that I don't have an opinion. Well, I think that Rivian, as a standalone company, would be difficult, and I think that Volkswagen really has the best part of the deal, as was already said. I think they're acquiring intellectual property at a very low price, which doesn't mean that they will become winners, because if they mistreat Rivian inside of the company, it will just obliterate.
Speaking of a company impacted by Rivian a little bit, Amazon, who owns some shares. Stock Talk. Did you see the news story? A little different, but did you see the news story today that they're planning to launch their own competitor, like Temu or Shein or whatever?
Yep.
You have any thoughts? It's an interesting thing.
I think it's interesting. I mean, look, they've probably seen the drop shipping industry grow so much under their noses, and they're the king of e-commerce. So, yeah, well, it's kind of I would say it's odd to me that was this high on their priority list, but I imagine that this isn't really a big logistical or operational change for them to just throw in a little discount section, which is, I think, how they're going to present it. Sort of like extremely discounted products that are just going to be direct shipped from China.
I mean, these companies, what's the market cap? I think Shein's like a $60 billion company, right?
With Temu, it's owned by PDD.
No, Shein, 66 billion.
Oh,
is what Shein's
Shine.
going
Oh,
for.
yeah. Oh,
Shine.
yeah.
I think it's Shein. Or
Shein, whatever. I don't
Yeah,
know.
I think it's Shein.
Doesn't Amazon already do that?
Whatever.
I don't
It is
think
not
quite to the
Shine.
level. I think this is like full on. They are shipping them from China, having a section in
Yeah,
there as cheap as
a
possible.
separate
It's a 9 to
segment.
10. It's a 9 to 10 day shipping, cycle, just like PDD and Temu. I've noticed, like, for example, my own mother, she shops for all her linens, and she doesn't need it. Like, I basically fund her entire life, but just because of the way we were brought up, we were very poor. She'll go on Temu and she'll buy all these trinkets and stuff that are 70-80% cheaper than Amazon. And she doesn't care if it doesn't take 1 or 2 days to ship. It usually takes about 2 weeks to get to her house. But, you talk to all of her friends, in that age bracket. I mean, this is a real price war. It did affect Amazon's valuation to some extent. And I do think that Amazon hit a $2 trillion market cap today because of, obviously positive tailwinds, from what they're doing with data centers, AI, but also because of the fact that PDD was taking real market share from Amazon. If you can read about it in several equity research pieces, you can talk to management. It was a real threat. Amazon is not that cheap, by the way. Like, Walmart online is cheaper than Amazon. Amazon's been raising prices for the past 5 years for many categories. If you look at AutoZone, O'Reilly, they're much cheaper when it comes to auto parts. The dollar stores are cheaper when it comes to like toothpaste, soaps, etc. Walmart's a lot cheaper in a lot of categories. Chewy is cheaper for pet food. Amazon is definitely it's for middle to upper class people. It's not for poor people.
Yeah, no, I mean, I think it's a good move. I think, to an extent, from a brand standpoint, they're putting a trusted American blue chip brand and they're slapping it on a drop shipping industry that's otherwise been viewed by a lot of consumers as maybe sketchy or, at arm's length from traditional e-commerce venues. So I think it's a good move. Again, I don't think it should be at the top of their priority list from an operational standpoint, but again, I think it'll be an easy thing to implement. Amazon also, I mean, the initial move today came from the chip news that they're developing their own chip, a custom AI chip with Taiwan's and Novatech. So that's kind of a big deal. It also has direct synergy with their investment in Anthropic that some people know about, and Anthropic's latest models have been quite impressive as well. So, I mean, I think Amazon's, again, it's my biggest position. I think it's kind of been overlooked a little bit when it comes to this AI race. I mean, you look at the AWS component, which is, basically the king of compute globally, and will continue to be for a very long time. You start thinking about, if you want to be forward looking when it comes to this AI theme, a lot of people are starting to think about robotics. Robotics is, going to be huge for Amazon, and I think people are really overlooking their potential role there as well. You look at international markets inflecting to profitability. I mean, Mexico, was really one of the focuses in the last shareholder letter they issued. With Mexico inflecting profitable, you're going to see that probably happen in other international markets, with also additional expansion in those markets, additional logistical efficiencies. They're doubling their same day delivery centers intra-year. Yeah, that's right, doubling them intra-year, which is crazy. Everything is just improving, and I think there's huge cost efficiency upside. In fact, I think the street is underrating the amount of cost efficiency upside that's here, and therefore the amount of margin upside as well. So, yeah, I'm giga bullish on Amazon. Even though, you can make some arguments about potential headwinds to the e-commerce business on a cyclical basis. I think, if you zoom out a little bit and take a 5 or 10 year view, I think it's very, very hard to be bearish on the growth of this company. I also think their pharmacy and healthcare initiatives are being dramatically underrated as well. I think those will grow into meaningful businesses. The way they're layering in this pharmacy and healthcare initiative directly into Prime is very impressive to me. It's been seamless, and it's just so cheap for most Prime subscribers to add this. You're talking about $5 flat fee for all generic pharmacy deliveries. You're talking about $9 a month for 24/7 access to telehealth. Like, they're just layering these in. Now they've added, they went from charging. It's funny because with grocery delivery, at first it was free over 100, then they went to charging for it. Now they've gone to a flat fee to get free grocery delivery over 40. So, like, they're continually testing these, new verticals they're adding to the subscription model with the base, and seeing how well they stick and seeing what the demand looks like, and they seamlessly change and adapt them. So, I mean, Prime's going to have 1 billion subscribers eventually. I don't know how quickly it's going to happen, but it's going to get there, especially when they start expanding Prime offerings globally. Um, it's just really, really hard for me to wrap a bear case around this stock. Like, I've tried. There's a reason I've been buying this thing so aggressively in the 170s and 180s. I mean, going into March, my cost basis on this thing was like under 110. And, since the beginning of March, I bought so much more at materially higher prices than my cost basis because, again, I just cannot think of a bear case here. Like, if Amazon were to go down 20% for some reason, whether it's a market crash or even a dramatic market pullback, if it were to go down 20, 30%, I would be selling other stocks to buy more of it. Like, that's how aggressively bullish I am on a 10-year horizon. I think this is going to be the quickest company outside of Nvidia to go from 2 to 3 trillion. I'll stand by that statement. Now, Nvidia did it in a very, very short period of time, but Amazon will go from 2 to 3 trillion very quickly. You almost blink your eyes, in my opinion. So we'll see.
I mean, the
That's all.
Amazon RX Pass that you alluded to, I do think, within sell side research, it's actually not covered. So just like 2 years ago, me and you and others on this panel were talking about the advertising opportunity at Amazon and how some of the parts there, they're doing 30, $40 billion of, advertising from nothing. I do think that in healthcare, it will take longer to scale, right? Because of regulations and just it takes longer to penetrate that market. But if you look at how broken our healthcare system is, there are two things that can disrupt, the PBM market, pharmaceutical market. And number one, it's Amazon RX Pass, which gives you, for $5 lower prices, simplicity. You don't have to contact multiple pharmacies or calculate insurance copays. They just tell you, and reliability because it's to your door next day. Imagine you're 80 years old. And then Mark Cuban with Cost Plus Drugs, which is similar to Amazon RX Pass, but it offers more complex medication offerings. I mean, this is basically what we need for the elderly population in the US, which is growing dramatically. I mean, here's one example. This is, very positive for society. There's a drug. I'm on a board of a private company, and this isn't a drug that's related to that company, but that's how I learned about it. It's a drug called dimethyl fumarate, and it's used to treat multiple sclerosis, which is a very common severe illness in the U.S. And the generic for that is called Tecfidera, and it comes in a bottle, 60 capsules, the strength of 240 milligrams, and that's a supply for 1 month. If you go through CVS and you get it with your insurance, even with the copay, traditional pharmacies channels, it costs $4,965 a year. Some of that might be covered by your insurance plan, but a lot of that you're paying on your own. Through Cost Plus, through Mark Cuban's company, okay, you get that entire month for $50, right? So using Cost Plus drugs for somebody who's 80 years old, it's cheaper than your copay. And, if the best thing Amazon could do would be to partner with Mark Cuban's Cost Plus drugs, and, they'll get the benefit of the $5 extra per month. And, they'll
They
be able to
even need to do
distribute.
that, Jay, or can they
They,
just
they don't
replicate
need
that?
to. They could replicate it. I'm not saying they have to, but if they did it right away, if they did that, it would revolutionize the entire US healthcare system because everyone knows Amazon. And, I think it's one of the most broken industries in our country. But I agree with you. They don't really need to, but I think Cuban's done a phenomenal job over the past
What
few years.
I agree with you, by the way, that Cuban's done a good job on that company, and it would be a no nonsense acquisition. But I mean, one of my favorite things that Amazon has done, I think operationally, is they are really fucking good at spending a couple hundred million or maybe a couple billion bucks and blowing the acquisition up into a massive business. Like if you look at the pharmacy business, Amazon Pharmacy, which is what it's known as today. I don't know if you guys remember PillPack back in 2018. So in 2018, Amazon bought PillPack for 750 million bucks. Okay, 750 million, which is fucking nothing. It's a $2 trillion company today, right? And PillPack was a company that took pre-sorted and pre-measured doses of medications and delivered them straight to companies' doors. Okay, and they bought it for 750 million bucks. Now they're leveraging that into the Amazon Pharmacy initiative, and it's basically the initial starting point of this entire Amazon Pharmacy business, which is already a multi-billion-dollar business and will be much bigger in the coming years now that they've scaled these initiatives to Prime members. Right? People forget from a narrative standpoint how compelling an affordable healthcare and pharmacy option is, especially in North American markets, especially in the US market, where we don't have nationalized healthcare, and there are many people who avoid going to the doctor altogether, or put off concerns they may have, who can now get 24/7 telehealth for $9 a month, pharmacy deliveries for $5 a month. I mean, it is compelling. You're not going to get everything you need done through Amazon, of course. You can't get a surgery through telehealth, but broadly speaking, it is an enticing offering for an American to pay $14 a month for 24/7 telehealth and pharmacy delivery. It's actually incredibly compelling. So I think they'll
And it's
get
not going to hurt.
massive.
And 100% in support of what you're saying. And people who think, oh, it's going to hurt pharma, it's not going to hurt the pharma industry. It's the insurance companies and PBMs where there's no clarity in pricing, where they're literally lying to people. They're not telling you the price. It's like you go to a store and there are no prices for anything. Like that is a US healthcare system. You can't figure it out. You guys should watch the South Park episode on GLP-1s. It is absolutely hilarious. If you're not familiar with the industry, they do a really funny job of explaining it, but there's no clarity in pricing at all. And what Stock Talk is saying is that this would revolutionize, the farm. These are generic drugs that people are getting overcharged for. Some of these drugs are not even prescription drugs. They're getting overbilled on generics, and it's completely like reprehensible. And it's not even that. Like, you can combine two drugs. Like, you could combine Tylenol with like PMS medication and market it as a brand new drug and charge $300 a month for it. And nobody, like, no person on the street, without even with a college education and a master's degree, would know, okay, is this the right price for this drug? Should I pay for it or not? Whereas if you went to India and you went to the street, somebody without a high school education would know, okay, if I need to get this antibiotic, it's going to cost me like 3 cents equivalent in the US, right? Like, because people know what the pricing is of different drugs, and the doctors know, and they share it with their patients. The entire system here is broken. So I 100% agree with you. If people adopt this, combine, telehealth and online pharmacies with the Amazon RX Pass, or, the Cuban program, whatever, I think this market could grow exponentially.
Yeah, I mean, if you look at Amazon's U.S. subscribers, right, you're talking about 170 million-ish just U.S. subscribers. Okay, is it outlandish to say half of them would sign up for $15 a month telehealth plus pharmacy care? I don't think that that's crazy to say. That's an incremental $1.2 billion a month just from these first two initiatives, right? Not to mention, all of the other initiatives that they inevitably will start in this space. But they're experts at doing this. They're experts at spending a couple $100 million and using the scale of their existing subscription service and their existing logistics and e-commerce expertise to blow those businesses up. And so I think Amazon will continually be doing this. I think robotics is another space where they'll be very, very competitive with Tesla. Like, a lot of people think Tesla's main competitors in robotics are going to be companies like Boston Dynamics. I disagree. It's going to be companies like Amazon that have the scale to be directly competitive. So, Shai, go for it. I saw your hand up earlier. Jump in.
Oh no, I was just gonna add.
Shai?
So I have some. Can you not hear me? Hello? Is it just stock
Yeah, I
talking?
can
I
hear
can
you.
hear you.
Yeah.
I
I
can
have
hear you.
some specific anecdotal evidence on what you guys are talking about, so I want to give my 2 cents. My team of 7 was in charge of pricing all the pharmacy drugs in Nationwide and Kaiser. So we had to deal with drug makers all the time, talk with them, and back then, like I was telling my girlfriend then, now fiance, I can't believe how it's the stuff they were talking about doing was legal, and the stuff that we had to price, twisting our arm from the drug makers and also high ups at Kaiser, like it was all legal, and I just couldn't believe the pricing that we were forced to do. So I absolutely do think there's a lot of potential innovation in this specific realm in the next like couple decades. If Amazon is going to be one of those leaders in it, there's going to be so much money to be made because it is archaic what currently is in place. Like it was like 6 years ago. My team was working on it, but 6 years ago it was archaic how we were pricing all these drugs and also all the requirements we were forced to do due to the drug makers. So love what you guys were saying. I just want to give those my 2 cents because I did have personal experience in pricing all these drugs in the nation pharmacies nationwide.
Yeah, just for Cuban in his operation too, he's only charging a 15% markup on the products that he's giving too. So if you kind of look at it, that's pretty low margins on the business, but obviously he has a mission for it, right? And so is Amazon gonna want to do that at scale? I think they could, especially with the subscriber base. But I
They
think that's
could,
probably gonna be the
but
biggest thing that they're gonna focus on
they're
is
going to, like, to your what you're alluding to. I agree. Amazon's likely going to charge, if they don't partner with him, they're likely going to charge a much higher price.
right.
But even then, if they charge a 50% markup, and it'll still be 80% lower than what these, PBMs and pharmacies and insurance companies are colluding to do. I mean, on that 5,000 multiple sclerosis drug, per month, if Amazon if Cuban charges 50 and Amazon charges 200, it's still an unbelievable discount, right, to what these guys are charging you for a generic at 5,000 per month.
No, I'm right there with you. No, I just wanted to provide clarity because I think the biggest question for Cuban and his operation, because a lot of people ask like, well, how is he doing it? and he's doing it because it's his mission to be able to do this, and he's doing it at very low margins in order to cover operating costs, right? So, and Amazon can do that, right? You could take a high margin business and squeeze those margins, but if you have scale and subscribers, I mean, you can make that profitable as well, for sure. I think that would just be the biggest like question mark for Amazon is what does that level look like, right? For marginability for this
Yeah, no, I
business.
agree with that point. Actually, that's a good point about Cuban's business being low on the margins. I think for Amazon also though, they have the complementary effect of just tacking on additional subscription revenue too, right? So that gives them a little bit of wiggle room and potentially an additional revenue tailwind. But yeah, they probably like you both said would want to come in a little higher margin than that if they were going to integrate a similar style of business. But I think the ecosystem they're building really is my point around healthcare and pharmacy. I think is just an underrated initiative, broadly speaking, and there's so many of these other initiatives within the business that don't show up on the balance sheet yet, that aren't being modeled by analysts yet, but they're there. Robotics was the one I brought up, but they've made a bunch of these, kind of minor acquisitions in the past 4 or 5 years that a lot of people don't pay much mind to because sometimes they're 300-400 million bucks, and people are like, whatever. I mean, what is that going to be? And then you close your eyes, and a couple of years later, they have an in-house initiative based on that small acquisition. So, yeah, I just think they've been executing really well. I'm really impressed with what Andy Jassy's done since Bezos left. I actually think of him as one of the best CEOs in the space right now. And I think within the next year, you're going to see Amazon get a little bit more credit from the market for the AI theme as well. I don't think they've gotten a tremendous amount of credit for it, but I think they're a very, very important player in this. In the same way that we thought of Apple kind of as having this hardware advantage to say, hey, look, we can instantly deploy a generative AI software to, a billion devices. Amazon in a way has this kind of product ecosystem built in as well with their Alexa products where they can put the brain in a box, so to speak, which really will be the next part of this whole AI theme, in my view. Robotics, self-driving cars, devices that are physical devices that you can interact with from a generative AI standpoint. I think that's really the next phase. We've already started talking about things like AI PCs. That's kind of been unfolding in the last few months with the Qualcomm and Microsoft story. So hardware is kind of the next frontier for where we take the brains that everyone's been spending so much compute to build in the past 2 years and start putting them into physical renditions. And I think Amazon has a distinct advantage there. So, yeah, I'm very excited about this company. Like, it's one of those stocks where, like, when it goes down, like, I just buy more, and I feel like I can't own enough of it. So, yes, it's a household name. Yes, it's a $2 trillion name. I'm usually don't talk like this about names of that size. As all of you guys have been listening to me for a long time, I usually talk about what I think are smaller or more subtle opportunities, but this is one of those obvious in your face stocks that I think frankly everyone should own. Not financial advice, but I certainly can't get enough of it. So
Can you touch on
Hey
the
Jay.
AI? Sorry, go ahead.
Oh no, Jay, I was going to ask you a question because it sounds like obviously you're on a board of a a pharmaceutical company or what have you. I mean, you may have more insight on this. 2 years ago, 3 years ago, there was an initiative by Amazon, and correct me if I'm wrong. I thought it was Amazon, J.P. Morgan, and Berkshire, or at least Warren Buffett was trying to get into it on trying to
Right, that
create a
was on health
healthcare
tech.
plan. What? Yeah,
Yes,
what
that
happened
failed.
with that?
Yeah,
Okay.
that essentially failed. There are various reasons why. But that was a completely you know, it was called Haven, and the reason why it failed in 2001 was also just the timing was really bad going into COVID. But whenever you have three companies like that with different motivations, Amazon, Berkshire Hathaway, and JP Morgan working on something together, right? It's hard, right? Just like we were talking about JVs, you know combined they had about 1.2 million employees. It wasn't really enough to get the scale they needed to build a full health plan, and all their employees were scattered all over the country, so they didn't even have enough concentration like per city or per state or per geography. And we live in a world where the more hospital beds are utilized, the more people get paid. And the U.S. health system is focused on treating sickness rather than preventing illness. So they're focused on preventative. I think it is the future. They were just early. Um, and the way that it worked was, they would pay, like 20% of their employee salary into a pool to participate, which is lower than the employee salaries that go out to pay for commercial insurance. So it was a completely different business model, right? This Amazon RX Pass is just a completely different business. It's not related to, these three health plans trying to merge together and compete with insurance. But I do think that something like that could emerge in the future. You just need a lot more scale. And, it just reflects on the fact that, companies are also not happy about the rising healthcare costs. It's inevitable that more and more people are going to get older in the US because of our birth rates, and it's going to be a bigger and bigger burden, right, on companies. But they're two completely different things. The Haven healthcare plan with Berkshire, JP Morgan, and Amazon versus this RX plan that we're talking about to deliver cheap drugs. One was a health plan, the other one is like a drug delivery and telehealth. So they're completely different businesses. And just on Amazon, Amazon tends to have a much different way of approaching things. Like Bezos historically, as you guys know, was very parsimonious, right? His first office, right? He had like power cords going through the office. It was like the office looked like crap. Even when it comes to AI, like one of the things I respect about Amazon AI is like they spent 4 billion on Anthropic, right? They spent a lot less than Microsoft because I think they're being more prudent in how they deploy. Like they do spend 14 billion on data center capex, but very small. It's not like they're spending 40 billion just on GPUs. Like they're doing it to build a business that actually has an ROI. Whereas with Meta, you don't really know what the ROI is going to be on all this GPU spend. And it goes back to this gentleman on the Midas list, um, who Khosla, who had the privilege of meeting back in 2014. He's one of the best VCs, in the US, right? And he basically said that he expects the price of compute doesn't necessarily mean the price per GPU, but the price, per unit of compute to fall. And who knows if he's right? Maybe he's exaggerating to make his portfolio companies feel better, but he expects it to fall by 80% over the next year. And if that's right, it makes sense for companies that don't have an immediate ROI, that aren't on the cutting edge of search, right? Like Microsoft and Google, to maybe wait a year or two to buy these GPUs, at a lower price per unit of compute. Because right now, one of the fears that I think Barclays has is that the ROI is not discernible on what these hundreds of billions of capital that's being spent on NVIDIA GPUs right now, right? A lot of it potentially could be front loaded and potentially could be at peak margins. I'm not saying that the next quarter is going to be bad. All I'm saying is you look 3 years out, the cost for compute could be a lot lower. And I think what Amazon is doing is their spend and their capital allocation is more prudent in what I've seen versus Meta, Google, and Microsoft. Because on the pure data center side, they're actually earning a real return on it.
Apple's going to beat them all. Jay, what do you think of Apple? What do you think of their AI play?
They kind of just did what they always did, to be frank. Like Apple's never been a leader in hardware. In terms, when it comes to, they're a leader when it comes to design and consumer preferences. And that is what Steve Jobs was good at. It's basically what Tim Cook is he's the execution guy, he's adopted, but they're not at the forefront of execution. They're working on their own AI chips, etc. I doubt a lot, is going to come out of that. But they failed with the auto effort. I do think that what they did was prudent in the form of, when I learned that they're not paying OpenAI anything up front, right, to get ChatGPT, right, as an additional tool into the Apple AI network. I thought that was ingenious because it helps, they're able to convince OpenAI, because I think, what I think that the VC I was mentioning earlier was absolutely right, that all these guys are going to compete each other to lower margins when it comes to, all these GPTs, all these models, they're all going to compete each other to zero, just like Ernie and Baba are doing in China. It might not be as bad, But I think Apple took advantage of that, and I actually thought it was a prudent move. The AI day itself, I was not impressed by at all. There wasn't like a lot that I thought, oh, this is amazing, or I'm gonna upgrade my iPhone 13 for. I didn't find
So
it.
you're okay not being able to use any of those features?
I'm completely okay because I'm on my computer
Interesting.
all the time, and I can, I go on Perplexity and I look up stuff all the time. I don't really need most of those features. I'm pretty well organized as it is, but I could see how somebody who's younger who wants to try, different tools and, I like the podcasts, transcription and all those types of things. Would I upgrade my phone right away for it, especially if I was on a budget? Probably not. Will it help Amazon? Will it help Apple on the margin? Yes. It'll probably help them on the margin because people likely want to try those tools. So I basically was frankly short Apple 3 times over the past year. 2 of the times worked. This time I got out break even because it was just a very cheap hedge, but it basically got me not to short it. But I'm not like to buy something like that in like the 30s PE with very little real innovation. Um, I think that they're so big that it would take a lot for Apple to be up 50% over the next 5 years, whereas Amazon could. So would I buy Apple stock here? Probably not. But would I short it before we get revised numbers for sales after this AI day? Um, it would need to rally a bit more for me to get more confidence on shorting it.
I'm excited for the iPhone release event. I think there will be increased hype, and that classic Apple run up into the event and sell off after it might take hold. It might be a month away, but watch out. This is a good talk. We're good to keep the conversation down. Wolf, I know you have a space in like 10 minutes, right?
Yes, sir.
Okay. Well, I don't know. Was there anything else you want to talk about? The clip that Jay was referring to, I pinned it up in the nest above of Amazon's first office.
Well, first off, Jay, I just wanted to voice
Yeah.
appreciation for you jumping on. It's always great when we get to hear from you. I feel like you bring a lot of wisdom to these, and I really liked your analysis on Rivian as well, because I think everyone was just looking at, oh, stock goes up, but your opinion on it, and maybe this isn't a good deal, right? And some of those pieces is really, really helpful for those of us that are looking to trade or invest in stocks like these. A lot of the other pieces were really great as well. So just want to voice my appreciation. I don't have too many other questions, but it's always great, and I hope we get you on here more often.
Thanks. We'll definitely try, and thank you guys for sharing good information. I mean, these spaces are free, thousands of people benefit. And, your time is definitely appreciated, I'm sure, by all the people who are listening in after work today. So, thank you for having me on. And, I think that when it comes to just fundamental analysis, there will always be a need for fundamental analysis, even as we get, more into passive flows and quantitative. Like BlackRock is like 70% quantitative at this point. You know, you see what Boaz is doing to them, that BlackRock isn't doesn't have the best governance or the best systems or the best way of doing things either. But just to summarize, when volatility, I love volatility, and when things move too far to the downside or too far to the upside, it only takes a couple hours to go through the filings and do the work. And I would recommend everyone to get comfortable just going through SEC filings, and before you jump to make a very large position in anything, just look. It doesn't cost you anything. Like, you don't have to hire anybody. Just go on SEC Edgar, look at it yourself. And that's what we try to do for people at a really low cost and kind of share insights. But you can do it yourself. You just learn how to go through SEC filings, and it could save you a lot of heartache. Like if you sold at 18:15 last night and then shorted in the morning, you would have felt like a goddamn hero, right? You could have round tripped like a 70-80% return. Like, nobody's saying you would time it perfectly, but there's a lot of room there to be right. And there will be a lot of opportunities like that over the next few years. I'm not talking about every day, for those day traders, but stuff like this happens like every month. And there's always something to do.
Well put. What's up, Evan?
Oh, I can't lie to you. You got me. I was looking up the Knicks draft picks for tonight. I did not know that the draft was tonight until yesterday, but yeah. But I appreciate the spaces. This was a great one as always. We had the Micron talk, which MU, what's the updated? They had
MU
some
made
more
it back
squawks
about
about it.
$10 there. I've been listening to the call, and then once they get into some of the Q&A, it turned right back around.
The thing about being sold through 2025 seemed to be something that a lot of people were gravitating towards.
Yeah, that was
Is that on the call?
that was the big pop you saw in after hours on the call a while ago.
Oh, and it's given a lot of it back actually.
Yeah, reminder. I've been listening to the earnings call through Earnings Hub. Great tool.
Ooh, shout out. Do you have an affiliate link, Emp?
With them, I don't. I think I started setting up the stuff with Heavy
We'll
Trader.
get you one set up.
But I never got through it. Great. Thanks for reminding me, actually.
Now Wolf will
They
message you
just
and get that
launched
set
it.
up.
Yeah, they just launched it pretty recently. So yeah.
Yeah, I talked to in the DMs about it, and I never finished it.
Wait. And then one other thing, you guys should go and like the tweet pinned up in the nest above. I did just delete that one, Stock Talk, so this one will be front for a second. But shout out to Sarge for writing us a nice thing, and we put out a good tweet for it, and you guys should go and like the post. Comment below it too.
No, yeah, definitely check that post out. Thank you to Sarge, by the way, for writing about the show. I mean, look, we've been hosting the show for. I mean, Evan, when did we start? Last February?
4 years ago, 5 years ago.
Oh, I meant like this actual.
No,
show.
this
No,
one.
that
This is
was
like
all. I
last
just
year,
was
right?
completely. I was completely bullshitting you. It's
I
been
mean,
like
we
a
have been
year and
doing
a couple
spaces
months.
together for like 3 years now.
I think it's
Since it
been more
started.
than a year. We because I
Dude,
remember
they,
Wolf
did, they
telling me
didn't
we
even
did this
have
for you.
Spaces 5 years ago.
2 years?
It did in my
When
mind.
did it start?
What, Spaces or this?
Yeah.
Wolf would know. I think it was
Spaces started in
20
what?
April
21?
2021. April
Yeah,
2021.
that's right.
So they officially started beta testing the product really even in December, January of 2020 into 2021. And then they started bringing in the first people to actually beta host in like February, March. I got access in March, I think.
I remember being
And
on
then that's
some
when
of
I
your
started hosting.
I
first.
got access in February.
So it's been a couple years,
Doubt.
right?
Let's see the
Couple
the
years.
Stock Fund Spaces.
I've been hosting I've hosted every single week for 3 years and 2 months, I believe. The last 3 years, 2 months. I've missed a week.
I see the Stocks Fund Spaces
No,
account
that 1
started
week.
in February of 23.
Oh, really?
What 1 week would you say? I think I hosted every single week.
No, I
Even
have
when I
at
was
least
on
3 in mind that you missed.
even when I was on a cruise ship, I hosted.
Okay, well, however long it's been, either way, this show itself, we've been running for over a year. And so we do appreciate all of you who come in. I mean, literally thousands of you listen to this show every single day. So that's fucking awesome. Like, just straight up awesome. There's no other way to put that. So we appreciate the loyalty of the audience for sure, for so long. I know we have had many, many different panels over the course of that year, and I've had a lot of people come and go and stay. So we definitely appreciate all of our panelists that have stayed consistent and have been with us for a long time. And you guys should be following all of them. That's a great way to show appreciation to the regulars, who come and spend their time here. So, yeah, I mean, we hope it's useful to you guys. We hope it's entertaining sometimes. We hope there are good debates sometimes. But at the end of the day, for us, it's like we do this every day. So, we try to provide some sort of insight on what we're seeing or what we're trading or what we're investing in and why. And hopefully it's useful to some of you. I mean, there are some stocks that we talk about a lot. There's some stocks that we talk about because they're popular that we may not talk about as, some other stocks as much. But at the end of the day, we try to cover whatever's happening, whatever's at the front line and whatever's important. So yeah, we appreciate all you guys for listening. It's actually awesome that so many of you tune in like literally every day. I remember I scroll down through the audience sometimes and I see like hundreds of you. I recognize like your profile pictures because you guys are in here every single day listening to us, even when it's boring or even when we're ranting or whatever the case may be. So yeah, thank you guys.
Awesome. Well, thanks, and to Evan and to Wolf as well as Tata. But Evan and Wolf have been doing this forever. I don't even think I started going on Space until months after it came out. boom.
Jay, I was your first space. I
Yeah, I
remember
was
your
your
account
first.
requesting with
That's right.
37 followers, something
Yeah,
like
at
that. I
37
remember you had the
followers.
Bloomberg terminal profile
Yeah,
picture.
Bloomberg terminal profile picture. I used to use, the first
You,
people I used to follow Kai Girl for like commodities because, Wall Street's terrible at commodities. Like whatever Goldman says, just do the opposite when it comes to commodities. So I would follow like a bunch of macro and commodities accounts on Twitter. I only used
well,
it for my personal investing, and all of a sudden, you have people who actually follow the markets on a daily basis, nerds like me, who you can just talk to. And I thought that was phenomenal. So thank you, Wolf, for hosting me.
Jay, I'll go deeper. I actually remember not only your account requesting, but I remember that you requested up to speak on a space where I was interviewing Jonah Lupton, specifically to come up on that space and ask a question to him. I actually remember that was the very first space. So
Oh, great
spaces
memory. I
are
remember it was you, it was Bahama Ben, and
oh
Jonah.
God, yeah.
Remember the old school accounts. There's an account that basically was a super long Peloton. The entire account was based on Peloton. It was the most bizarre thing I've ever seen.
I
And
remember this guy. Yes. Oh my god, dude! I'm
all
laughing
around.
so hard in the background.
But Twitter was crazy
Oh,
at that time. They had free money. Nobody was really looking
so
at
many, but
any
Jay,
filings.
Jay, we've both been there since the COVID era, but I remember so many of the big accounts from back then aren't even here anymore. Like so many of the
Oh
accounts
yeah,
that
a
had,
lot of those guys like blew up their accounts.
yeah,
100%.
I mean, not only blew up their portfolios, but literally blew up their social media accounts too.
Oh,
I mean, there were
100%.
some with like 80, 90, 100,000 followers that, they get like one like per tweet now and never tweet and aren't like, they just disappeared,
Well, engagement's just really low. I think part of it's people have been forced to go back to work, right? Like imagine like all the JP Morgan analysts who are at home dicking around, trading Bitcoin. All of a sudden, Jamie Dimon's like, you need to be in the office 5 days a week. So part of it is that, right? Part of it is, just new leadership, right? And people are unfortunately in this country there are only two parties, right? Whereas in Germany, they're multi parties and no one takes it personally. Here, people take it personally when you're on one party or the other, and that forced some things to change. So it's unfortunate. Engagement is a lot lower, but I think the people that really care about learning, including me, because I learned from you guys, like, and I learned from everyone who posts, because every opinion I think is valid to some extent, even if it's just for behavioral finance. I think that community is always going to be around.
Love it. All right, guys. Unless you guys got anything else on this one, and I'm happy. Next space we can reminisce, go back to the old days. But yeah, it's been great, and I appreciate you guys being up here. Looking forward to more spaces with everyone. I am gonna close this one out. I'm gonna be opening up a space on the Wolf account. I was just gonna talk some like favorite setups and stuff like that. I think Jaguar and a couple others are gonna hop on. If anybody from this panel wants to come, please, you're invited. I would love to have you guys on and just talk a little bit. So, see you guys there. I'm gonna open it up from the Wolf account.
Hey, just real quick, if you guys go on YouTube, you can watch this like coup thing happening live, and it's now starting to get pretty spicy. You're
It's
starting to see people out in
insane.
the streets and stuff. Yeah,
Post the
so just
link.
check it out.
Oh yeah.
Yeah, I'll post it. I'll post it in
It's
the comments. I know he's got to close this out. I'll post it in the comments though. Yeah, I just found one that
just
does
come
English, so it's pretty intense.
come on over there. I don't want to keep people waiting, but we can talk about it on there.
I gotta go and
All
coach
right,
a
guys.
baseball team. Okay, I'll talk to you guys. I'll post in the comments.
Sounds good. Sounds good. Talk to you guys.